Yo, guys, how we doing? Hey, we're live. How we doing, guys? Yeah, we are. All good. Welcome to another episode of my streams. There we go, music off. If you haven't been here before, basically what I like to do is meet new traders, have conversations with real traders that maybe you probably won't hear much like that around. Just kind of go deep on the lifestyle and the habits that it takes to be a consistent trader. And tonight I've got BC Richfield, who we haven't talked before, like sort of what we're going to be doing tonight, as I have not been with most of my guests, but was recommended by Chad and Mutual, and I was like, yeah, that's cool. Let's do this. But after checking out his live trading and everything on his profile, um, funnily enough, also works at Hyro Trader. So anyone who is following now knows that I'm partnered with Hyro Trader, and this stream is in collaboration with them as well. So if you're looking for a decent prop firm to trade for, then check out hyrotrader.com and use my code TraderMatt for 10% off all fees. And this wasn't actually set up with Hyro Trader in mind. As we were saying before the stream, I've had a lot of people had been messaging me from the company and just seemed to be this weird kind of, I don't know, spiritual drive behind it leading me towards Hyro Trader. And here we are. And so even though this hasn't got anything to do with Hyro Trader, I'm going to say if your real name is public. So I'll say PC is working over there. And also most of you may know him from the Burb Nest as well, who I didn't know that until today, obviously. So very excited to talk to you, bro. And let's unmute you and get you in. How's it going?
Wicked, man. Thank you very much. Great introduction, as always. And like you say, is the term serendipitous, I think, is it? Like where we just both end up kind of knowing a little inner circle of the same people, a lot of kind of, I don't mean this in a twattish way, but a lot of real trader backgrounds, people that kind of either trade live, showing wins, losses, either come from prop backgrounds or sometimes traditional finance or, just some old school legends like SC and XO, stuff like that. And then as we find out, as we start to chat a bit deeper. We're both over at Hyro Trader. So yeah, awesome. Really, really glad about that as well, man. And yeah, everybody use Matt's code for this. Is it's gentleman. It's his stream, right?
Thank you very much. Yeah, I didn't even pay him to say that. This is how warm this stream is already. So we're going to run straight into it, basically. And so we've got 4 chapters, and we'll see how much time we've got. And because I end up waffling, and I'm sure you may waffle based on what we've briefly talked about already. So the first chapter is teach me how you trade. So essentially, it will be from if you're not in a position and you're looking at the charts, what you're looking for, how you're analyzing things, and then what kind of triggers you'll have to get into a trade. So I'll switch over to your screen so we can see that, and then yeah, floor's yours, dude.
Perfect. Thank you, man. Well, so I kind of blend order flow and volume with price action, right? So a lot of my early stage trading, which I think we'll kind of dig into a little bit later, came from traditional markets. So the kind of use of, you know, I came to the realization pretty quickly that I wasn't in a position to kind of dictate where these markets go, nor was I smart enough or well resourced enough to kind of predict it that accurately, right? Even though I had varying success. But I realized what you could do is look a lot deeper with inside the charts, right? Find out where people are positioned, where there's high probability areas where we can see a reaction based on the auction market theory really in its purest form, right? For every buyer you need a seller, and ultimately you can find those pressure points in the market, and then with the use of order flow price action, finding what I call those inflection points. And I think a little bit similar to what I see from your stuff, I'd probably drill it down onto a bit of a lower time frame, is I'm looking for what I call origins, like supply, demand, key areas that have led to larger moves. So, classic example that I can see on your chart is like the red area that you've got, right? You're looking at that, like the red box that goes across. So you're saying, okay, price gets up into here. If we see the right kind of catalyst, then it makes sense for a number of reasons. People taking profit, right? Looking at resting sell orders that are left there as well. So I find it's a much more reactionary form of trading rather than one that's based around prediction. So I thought I'd start with this one because this is something that I shared with the community today and shared with the trading team as well. We made absolutely next to nothing on this one because we were pips away from tagging out. So the approach that I have for prop trading, which I think I get a lot of questions on as well, is I'm really trying to push to secure maximum reward to risk, right? Because fees are heavy. I'm pushing down into really low time frames, right? So where if I'm trading in certain tiers on centralized or decentralized exchanges, I'm getting, some really, really favorable fees, right? But I need to negate that for prop, which is only fair because it's allowing me access to a larger pool of capital, right? Excuse me. So I thought I'd just start with this one, right? And what the kind of premise around it is. So something that I like to do is bring in the volume profile. All right, so let me just get rid of this for a minute. And we'll start this one from scratch. So in terms of being intraday, something that I'm really interested in here is what the volume, how the volume's been transacted in the previous days building up to it, right? So I'm going to pop the CBD off for a minute. Now, one of the first things I'm looking for, excuse me, is whether we have value crossover, right? So we've got days that are trading within one another, in preference really making a larger composite range, or if we have some form of value migration. Okay, so we tend to see when we're trending like this, we just see the volume profiles migrating lower, right? That's the value area high, the value area low, and the point of control. You know, after you have those big drops, you normally go into some form of consolidation. So I like to kind of try and break into two intraday models. And one is tapping into whether we're trending on an intraday basis and I have clean down or upside targets, or if we're in a rotational environment. All right. So putting that in a kind of nutshell, if you like, here, we can see that obviously price is selling off, right? We've had 2 days of lower prices. Volume has backed that up. And when we look as well using order flow, we can see that we've got a lot of pressure, slightly thin order book, price still being driven lower. So what I want to understand is how price is reacting in relation to yesterday's price action more than anything, the volume, all right? So as we can see here, we kind of took across the value area high from the previous day, and I'm just going to do the same here with the value area low, all right? Now, the idea here is the concept is that if this is where volume, price, where participants were transacting, then there should be a level of respect for this. Okay, so as in we would be looking here in selling off. I don't want to see price doing what it's doing now, getting back into yesterday's value area. If we can displace into that, we see those strong, large moves and we get the pullbacks that's holding within the range, then I think there's something statistically, and not across all crypto pairs, but if you look at it as a generalization, around about 64 to 68% chance that that rotates to the opposite side of the range, right? So immediately I know I've got probability on my side, right? And typically if I'm wrong, and I can put impetus and momentum aligned with that, then it gives me a little bit of an edge. So the reason that I was looking to be short today, and the reason that I called the short trade, was because we were driving up here. So the green boxes just denote the key areas I'm looking to trade. I look to take it a little bit earlier. Most people kind of looking around about 1:30, 2:30 p.m., which is aligned with the New York pre-market and equity sessions. But I've actually found, especially in the last kind of 18 to 24 months, that the crypto's been running very hot from 12 o'clock, right? So an hour and a half earlier. So I started to factor that in, and there's been a big part of the way that I've traded over the last kind of 8 to 10 months. But this is the reaction zone here that I'm looking for. So the first thing I'm saying to myself is, okay, where's price trading in relation to yesterday's value area, and what's my overall bias? So my overall bias is bearish because we're seeing that value migration lower. We're seeing it in price action. We're seeing it in volume. So I'm saying to myself, well, what's capping the market in terms of supply and demand? So if we're in here and we're setting new lows, and especially if we have displacement, then that's really what I'm looking at, all right? But any move where we see an aggressive spike in terms of volume, in terms of price action. So if I want to be short here, I'm looking back to this area. All right, we've rejected from this area here, through here, and through here. So I can denote that there's obviously something within here, right? We've got supply that's keeping the market suppressed. Now, if those sellers there want to protect price, then the chances are when we revisit that area that they're going to protect price. If here is considered discount towards the lows of the range, and this is where speculators are happy to buy early, the idea is that if they start to see resistance before we've seen any significant flip, they're probably going to be slightly weaker hands. Yeah. So as always, you're looking to get to about 2R on any of these trades as an absolute minimum. That's normally where I look to secure stops, maybe take a little bit off the trade. So with this here and us having this displacement off the move as we stepped into the session, I'm kind of considering this whole area here, but I'm also considering this as the real kind of localized supply. All right, this area here, these two candles here, because they're in the range of the larger candles, but in general, this area, if we draw it back, you know, I want to see a large move above this area like this, and I would need to see that close and gap higher for me to want to really flip on this at the moment, because quite often you can see these areas just get absorbed. You leave these big wicks, price comes in, traps those buyers, and sells off. So this was the area that price ran up into it. And one of the next kind of key components is for me is that we have some kind of sponsorship to the move. So I want to see some aggression. I want to see some momentum into the level, right? Because we're either moving through a thin order book, which means that you're potentially about to hit a wall because the orders aren't stacked. But what you're definitely going to go into are some sell orders, right? Whether they're still resting there or not, we know that they were there present before. So the next key thing for me is then I'm bringing in the CVD and I'm saying to myself, all right, are we seeing any form of absorption here on the CVD? Do we have the divergence? All right. And with this one, we did. We've had a really rapid move up into this, come into the place quickly, and then, ultimately, we're then looking to trade that sell off down into around about the equal lows or the lower liquidity. We didn't quite get that today. Let me pop on the actual trade and show you here on the 1 minute. In terms of entries, what I'm looking for, and I actually saw one of your videos recently, Matt, that I found really interesting about kind of forming the range, looking for that drive out one side, then the fake out, and then the kind of reversal. For me, I like to trade inversions, right? And in truth, I wasn't quite ballsy enough to trade this one. I probably should have done. There's just a little singular gap here. Also, you need to be careful with the amount of percentage that you've got in the trade, right? Because otherwise, you're opening huge position size for minimal return and you're just giving everything up in fees. So, actually, on this one, it was kind of a little bit more like a kind of what I would call my tertiary or third entry model, right? Which is when you wait for price to hit a level and then just look at the CVD just dying here, right? As price comes up into this. And then what I'm looking for again is that next move. I'm looking for that aggression to the highs again that then dies out, either collapsing down with gapping and you look to get in on the retest, or, as with this one, the key thing for me here is the inversion of this M1 bullish gap. Let me just make that a little bit clearer. Because then what I'm happy to do is add as the position comes back as well. But a kind of caveat that sits over all of this is that I also need order flow to agree with that as well. So I want to be seeing, aggressors coming into the highs and just not able to push price higher, right? And I want to combine that along with CVD divergences as well. So hopefully, I know it's a little bit of around the houses way, but it gives a little bit of an idea of how
Yeah,
I trade.
yeah, 100%. That actually a lot of that was very similar to my outlook and how I do things. So I've got a few questions on that. First of all, that bullish gap that you've marked in the blue box, what is that, and how did you come to like get that?
So actually, I built a system years and years ago. I started in prop trading equities and FX, and noticed that one of the most recurring patterns were inefficiency failures. Right, so inefficiency in order pairing coming up into the gap. If you have a singular clean gap, right, what I'm then looking for is for price to violate that gap pretty quickly. What I didn't like about this one is that we had this secondary gap here, right? So this here is just one price leg, obviously, from the low to the high. Yeah. I only want to see one gap in there. When we combine that with order flow and we see a flush of sellers coming in that are just getting absorbed into a wall of passive buyers or vice versa, the gaps up are often great signals. Yeah. Combined, if we just look at this one here, yeah, when we're looking for CVD divergences as well across those, right? So really, I'm just looking for that disagreement in what I'm seeing from volume and mainly aggression to be met on the other side passively. And then the idea and the premise coming from the idea that although price can move through gaps very quickly because there's not a lot of orders there, it's also the perfect place once price is driven there, typically by market makers, for buyers or sellers to step back in at that point. So if we were really bullish through here, we've had several examples where those gaps up should be supported. It was here. We form another gap up and we quickly violate that to the downside. All right. I actually got in a few candles late on this one, right? I was actually, well, I actually made a massively amateur mistake when I was signed out of my account. So I ended up getting in like 3 minutes late on this one, which I'm not proud to admit. Um, but that's the kind of premise of it overall, right? And then you can just add as price kind of comes back into the level. Typically, I don't go in with a full position size, right? But these type of entries, I'm a little bit more hesitant to take them on an initial spike, right? There's an expectation that price is going to kind of come back and flush it again, unless I've got a really big divergence there and I've got a really key level. Because the difficult thing here is if I'm looking to enter, is okay, then, really where am I covering myself with my stop? If I'm kind of zooming out, fine, I've kind of got these highs up here, but it's not really locally defined. If price kind of ranges on the breakdown and we're seeing that exhaustion, which we see here quite clearly, and if we look at what we saw here today as well as we were coming in, this is just on the 5 minute. We're getting these massive spikes coming into here, right? Through here, you're looking at an average of say between 3 and 500, right? In terms of total volume at the top, spiking into 3,000, 3,000, 3. We're getting, heavy bullish delta coming into this, telling me the bulls are the aggressor. They're trying to push price higher. As that starts to wane here, we notice variable drop off here in price, all right, in volume, sorry. So what I'm looking for is super aggressive. And actually, this wasn't the most aggressive. I like looking at delta liquidations as well, making sure we're taking out some players on the other side of the market, because then there's more likely people within that squeeze. And then it's either a case of absorption or see if I can find you a good example on here. If we get something like this is something that I would consider taking if it was at a key low. Like if you get a heavily negative candle coming into these, and unfortunately these aren't, this one isn't too bad, but if you had a lot higher volume and you see a really big bearish candle that's heavily weighted at the bottom with sellers, you're coming into an area obviously that you've designated previously, be it value area low, supported with demand. Then the fact that you can see that, you get those delta liquidations, you get the long downside wick, and you're closing a bullish candle with a heavy negative delta. That's a point I'll get straight onto the chart and I'll see if there's any form of inversion to catch. But I'll look to add below that and maybe set a little bit of a wider stop.
Okay, interesting. I've never heard of anything like that before, to be honest, with that little gap.
Really dangerous on crypto is the problem, right? Because if you go onto the NASDAQ, right, and this is set, by the way, I know you'll know this, but this is just regular trading hours, right? So this doesn't allow for the overnight session. Yeah, the amount of clean single inversions, right? Now, just showing that this is just looking at this from the term of being a singular price leg, right? So in terms of a singular price leg from here to here, right? Or for example, if we're looking at something similar here, including this leg up as well, this one from here to here, right? Then we have down here, here's the first inversion, right? So you go through that, obviously stops below the low. You need to see momentum and ideally not violate the high that set the low, right? It's a little bit of an algorithmic pattern that if you study across, equities, obviously you need to plug in things like average volatility, ADR, bits and pieces like that. And then here, we have, this is a little bit of a thinner one, so this is a bit of an uglier one, but again, bearish, moved through. That's not too bad, like 1, 2, 3, 4, 5 candles, but this was better. 1, 2, 3 big candles, right? Kind of moving straight through. And then the other one that we have here is this, right? So the other downside is that you need to market enter on these, right? When they kind of go through. But this entire scalping system was just built for the NASDAQ with like a little bit of a 15-minute overview. If you again put the session profiles on, yeah, down below here, we'd be looking on here for CVD divergence coming in, which we can see we've got a lower low here, but a higher low. So lower low here, sorry, but higher low on the CVD, showing that this is more likely a divergence or a deviation from yesterday's range lows. So then we can jump onto order flow, look for that. If the momentum swings, then it's the case of identifying those gaps. And that's basically what I took across into crypto. The difficulty with crypto is the size of the moves, the volatility, stuff like that, right? You got a lot less, or you got sorry, much more illiquid markets in crypto, right? So you try and play the same kind of playbook here, and you can get, you find multiple stop outs. The issue being as well that the percentage size of the moves. Try and do something like this on Bitcoin on a 1 minute chart, and your average position size will be like 4 million, and your fees will just eclipse anything that you earn.
Yeah. Um, Actually, just looking at that, the way that you said that you were a couple of minutes late getting into it, it was kind of a blessing. You got those little small candles rather than just rip through because it gave you a little bit of time to get in there.
Yeah, I would have been out here, right? So if we'd seen this candle come through into the low, I couldn't have taken the inversion. What I would have done is taken a little volume profile on this on MMT and just looked for those kind of low volume node re-entries. But there's no way I would have been in it with a full position. This allowed me to get a good position size in this. And I think in the end it was out about 3.6. I didn't really make anything on it because I got a little bit greedy on this one because it looked like it was going to track down. I kind of I get to 2R and then I secure the position. So 2R was back right up here, right? Because we got the good entry. Price came back fine. So in by the skin of your teeth there. Then it came back down. And then around about here, I got a little bit greedy because the drop on the CBD as well matched on the chart. We got a little bit of a pullback in equities as well. And I thought as we got to here, I like 4R trades, right? I know everybody likes 4R trades, right? But it's like if I've got clean demand, even on an M1, like here, right, we've got this beautiful little consolidation before the pop. This is really where I want to be asking the first question about, do I want to be holding the short? And yeah, trading's all about hindsight, right? So I got taken out of it here about £5:30, literally for fees and about 300 bucks in the bank. But it could have been a really nice 4, 5, 6K plus if it had got down to target. By the time you take that chunk of fees out, the management, as you do, kind of managing the accounts, especially on prop, then it really makes it worth it. And if I can catch a couple of those a week, that's normally where my bread and butter is.
Okay, yeah. There's something that really like resonated with me what you said is that right at the beginning you said you're more a reactive trader rather than predictive, and I feel the same. Does it come from you're watching everything develop in real time, so you're kind of dancing with the price action, you're dancing with like all the orders really that are coming in, you get that kind of sense of flow, and then that's when you mark it in. Is that kind of how you basically trade?
Yeah, I mean, basically, I think I try to make the system as mechanical as possible. So finding the locations, but then I try to make the entry as heavily feel possible as I can, right? So just taking on board a lot of years of experience. And, someone said this to me once, and I only really started appreciating it the last few years that money in the market can't replace time in the market, right? People think, oh, if I just chuck loads of money at it towards this, that, or the other, training or big accounts, and I only need to make 1% here or there. And you don't realize until you've lost so much money that if you can't make $10 into $20, you can't make a million into 2 million, right? But I suffer with ADHD, which probably comes across, on every single video that I do. So for me, I need like a lot of stimulation. So I'd find like swing trading, which was my early career, I was just like obsessing in the charts. I loved the feedback, loved the process, loved everything about it, in it, bang it. Right, trades going, hell for the next 3 days because I was just some big anxious mess waking up at like 2, 3 in the morning being like, oh, I wonder what's coming in here. Oh, we've got this news event, we've got blah, 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 blah. And it was interesting actually being on the call now and looking at this initial move off the FOMC, right? The printers come in as expected, flat. And these are the kind of things I mean. You're looking for the market to tell you something in here. So for me, as I said a minute ago, right, I'm not really looking to get long on this until we really close above this area. And it looks like a really kind of arbitrary area. And it would probably be back to here, right? Because it's the key consolidations. It's almost like a range, real messy range, right? Coming high to low, but it's really characterized by the order book and also characterized by supply and demand. So now on this, I'm kind of looking at this and I'm saying, okay, that massive wick above here. We've just had a major news event. We've clearly got divergences here on the CVD. If we move across onto here now, what I really want to see is exactly this kind of candle. Yeah, so massive bullish candle with this huge long down wick, 5x the volume coming into it. Not as probably heavily bullish delta as I would like, right, off the back of that. But a number of liquidations, and we're seeing those liquidations come into this level. So that candle closed 1905. I wouldn't recommend doing this on an event like FOMC or something. By the way, I just don't. It's you often get these big effing whipsaws, right? That come into the market. And the other problem that I have is often you don't really get the inversions. Like I'm not going to take this. First of all, there's two gaps in the leg, and it's miles above. But what I can absolutely do now is say to myself, well, if we are holding this level, um, and actually let me just get rid of some of this crap so it doesn't look so cluttered. But in terms of like holding this level, right, then all of a sudden, all the information I've got is, well, here's the value area low of the prior day. We've been really struggling to get back above this all day. We've had a major news event now that's wicked up into the highs, but I'm within yesterday's value area, which means that there's, looking at this on a base level process, it's more likely to be rotational back to the other side of the range. Attempted it once, attempted it twice. If we break down and displace below this now, then I get that aggressor leg lower. Then I can look to the a seller on the pullback, right? Because one of the important things for me is if you look at any chart, is it's so easy to get confused. A lot of people that I've worked with over the years with market structure are just like, right, bang, big move higher, I'm bullish here, right, and get caught on all these kind of little moves, not kind of focusing on, okay, where's the origin that kind of set the leg lower, and then just overall holding that bias. Just because the intraday chart spikes up for a minute, the 4 hour looks like absolute death off a cliff, right? You're like, oh, well, I'll just be bullish all of a sudden. Well, if you've got moves like this, being reactionary, like we're talking about, allows you a lot of flexibility, right? Because huge move like this straight into supply, and we see that the CVD is just selling off aggressively. We can get ourselves in there, order flow, or even in price action, and just look for those moves. And again, I didn't actually trade this one yesterday, but if we go back, I'd imagine you'll see some early stage inversions, and then you get those kind of secondary moves and those spikes like you were looking for, right? Where it's starting to run the range highs again and break down. But, again, nothing really interesting here in terms of inversions. There's two in this leg as well. And as we go through, there is in here. So then we're waiting for that aggressor move again. This up into the highs, no CVD agreement. And then we can trade the leg down when we take out the lows. And then again, always looking to just add little bits if we can on the pullback. So I'm normally between 50 to 70% exposed to a trade at the initial entry. And then I'm looking to get back into that as we see, CVD like this, for example, is giving me no reason to look to not be short on this until we get right down here, into the lows.
Yeah. So are you I imagine you've got several different plays, but one of the things that I've noticed when I've been doing this series and talking to more traders is that the guys that tend to be most consistent are the ones that focus on ranges like this, not
Mm-hmm.
necessarily like a really clean here's a high, here's a low, but sort of just kind of what you've drawn there, really kind of sketchy looking pivot, and then you'll see wicks to either side, and then something that we'll go into later on in the stream is about patience. But
Mm-hmm.
one thing I've noticed with these myself over the years is that there will come a it's sort of like a watershed moment where like it will just like a dam will break and then suddenly the volume kicks in and then the
Yeah,
one breakout that even though it might have had four breakouts to either side, there will suddenly be something a little bit different about that next one that ends up going, and that takes the most patience. So is that kind of how you're like watching everything to kind of get that moment?
and 100%. And I call it with any students that I call it the where of trading, right? It's probably the most important part, especially intraday, is people obsess over the signatures. One of the things that people ask you again and again is like, but yeah, what's your entry signature? What's your entry signature? And I mean, when I first really started seriously getting into crypto, maybe like 6, 7 years ago or something, and I learned a lot from Trader SZ, which I think you know as well, and just a really good guy. But I'd done so much with him under FX, right, and then come across into crypto. And I remember him just saying something on a stream once to someone. He was just like, "Look, will you just all this is watershed, right? Will you all just fuck off and stop answering about it as he's dragging another cigarette, asking about fucking entries?" He goes, "I just enter fucking blind. As long as I know where my invalidation is and it's going that way, I don't give a shit," right? And he just goes on this massive rant. But it's actually really true, right? Because people are obsessing over the wrong things, right? People want these tight 12-hour trades that people fantasize about on Twitter and stuff. But actually, like you're saying, the key thing for me is it's where do I want to be a participant, right? What do I need to see? What do I want to see? And actually, order flow really helps with this. In my early stage of trading, I wasn't, I didn't use order flow, and I studied it for like, as is my approach to most things, like I think about 14, 18 months before I even brought it into my actual real live trading. That's another thing I'm a huge advocate of. You've got two parts of you. You've got the trader and you've got the student. We're never not students. We're always learning. But the biggest mistake you can make is not really focusing on your niche for what pays you, while you piss about and explore other things, right? That's great. Always have that hunger. Always have that drive to learn more. But the trader's the one that pays your bills, right? And if you want to make it long term in the game, then you have to be earning at least little and often. But what you said just made me think about this, right? And when I look at this, I don't know if everybody can see this clearly or not, but this kind of color panels at the bottom, right? Now, what should really stand out here are when you get these real bright lines all aligned with one another, right? And we've got this line of really bright here, and that's because it's set to shine when it's multiples higher than a previous listing of different candles. So what actually happens here is we're looking to be long on a run of the low, on a value area low, into higher time frame demand. And actually the key thing is here, this comes in quite a few times to this higher time frame area, comes into it here. But this is the one that we got to wait for, because this is the one where we not only get confirmation from volume, but we can actually see on here now traders really starting to get liquidated, you know, because we had this initial spike down in here, right? But we didn't get any follow through. And the problem for me here was we didn't have a seller aggression, right? I remember I was on a live show going through this, right? We didn't have seller aggression here. Great candle, yeah, you know, bearish, big long wick, but we want to see sellers getting, you know, absolutely destroyed here, not buyers. Yeah, this can be profit taking, this can be a number of different things, right? But if you've got the patience to wait for this, I mean, tell me that sellers haven't just got hurt here, if aren't going to be hurt here if this thing goes up. 8k volume, like 5 to 10x what some of these are, right? Maybe more, 12x, 51%, you know, negative delta, 65 liquidations there, 66 liquidations before it. Something's telling you that there you do have that kind of wall. And from a patience perspective, this really helped me. If you're not somebody that uses order flow, excuse me, then CVD is another thing that really helps me, because I either look for like a 15-minute high to be swept into some form of supply or demand. But the key thing here is just really, if you look at most charts, you should just, you know, in truth, be able to say to yourself, well, sellers are probably dominating below here, you know, and however low you want to drop that, really your job as a trader is to say, well, while they remain dominant below here, if you can find, you know, buyers down at these lows, sellers up at these highs, if it looks like a range and it smells like a range, it's probably a range, right? It might not look like it, like most people would see it. I think that's why I learned so much from SZ on this front, especially with crypto, because it was a lot more volatile than I expected. But seeing these big deviations, right? Seeing these big runs up, and then like this, right? You know, this thing here from this pivot, you know, lower high on the CVD. There's tons, you know, tons of buyers coming into there. If this thing gets back below like it did here, you know, they've got a big question to ask. Do they want to hold those positions? Do they want to cover? Do they want to get out? You know, ultimately, you want people on the other side to be forced to make their decision rather than have the benefit of time.
Yeah, and I think Hyperliquid is a really good example of this kind of thing as well, where you get these big deviations away from this pivot point, and then eventually it falls, and then it just can't get back above it. I
Mm.
imagine, I mean, I get it all from the price action. I'm not someone I've tried order flow and I've tried different indicators, but again, it was like something that I felt was adding to my process, that like too much thinking, too much headache, too much like deviation away from what I'm used to, and it kind of like, there's too many decisions to make, so fuck it, I won't bother with it. And that's kind of
Yeah,
how.
no, I understand that. I'm a massive fan of, you know, the KISS methodology. Keep it simple, stupid, right? Like it's just, or keep it stupid, simple. I think, you know, someone just said it to me as if I'm stupid. I think it's why I remember it the other way around. But it's, you know, if there's anything, if you can build a successful system, genuinely, I've seen people succeed with price action and lunar cycles. I've seen people to, if you've got the data, you've got the strategy, and the thing pays you, just trade the damn thing, right? I think one of the greatest traders probably of our generation, Christian Kolmagi, traditional market trader, you know, took 5,000 and built it into, I think, 200 plus million. Okay, longer time frame trader, but what he just framed this so beautifully. He said, just find the things that work, that have worked for ages, that don't not work because they're based around principles that make sense, and turn up every day and just do the same boring shit. Here's a guy that grew 5 grand into 200 million, and he calls it the same boring shit every day. Yeah, because ultimately, if it works, it works. For me, I think, yeah, I think it was a few things actually. I think there were some psychological issues why I really broke to order flow as well, because when I started doing this live in front of, you know, hundreds of people, then thousands of people, then at events and stuff, you know, it adds a lot of pressure onto you that you don't get from the kind of insular world of trading, right? And I think for me, I felt like I never needed it trading the Nasdaq, which was mad, right? Because I felt that the price action was really clean, trading the inversions at key inflection points. You got great confluence from the DXY. You can use the VIX, right? It just, for me, it just makes a lot of sense. And I think crypto really kind of tested me. And then for me, I just wanted to start more. I wanted to find a little bit more confirmation. I went down this kind of rabbit hole that really affected my results for a while. Can I do this with an indicator? But they're all lagging is the problem, right? Especially intraday, you're in such a mess. Great for longer term systems, right? How I do my investments, my stocks. But for me, order flow was kind of just saying to me, as someone that's quite a contrarian trader, looking to trade reversal points, mostly range trading, I think is where I thrive because I have those real defined boundaries. Order flow just added that little thing that kind of said, look, you can really visualize the exhaustion here. And it gave me that little bit more impetus to maybe be a little bit braver because I think I was somebody that, or I am somebody that's more risk averse in trading than I am in life, right? And I think it helped me kind of take that push towards saying, okay, look, just you're into this, just go for it.
Interesting. Very interesting. Um, the I had a talk with Trader XO, and the that actually on the chart now, which you've got at about 12 p.m. on the 27th, right in front of you, that where it pushes up and then it does a drop down. This is a really good example, actually, of what I want to talk about. So my system, for example, would have had me entering, like, so you get the big fake out to the upside, and then you about three candles later you get that big momentum candle, with, yeah, that one, which
Yep.
closes as a lower low from the structure. Typically, that would be my entry, and
Mm-hmm.
um, where it had the high, I might have got like a little sense that okay, this might top out and drop. And XO uses order flow because for the exact same reason you said, you get to see where the buyers and sellers are stepping in and who's getting exhausted, and he can make that decision with not focusing on the price action, but focusing on the flow. And and the market profile, and that was like his way of being able to catch those sort of like pico tops before
Yeah.
the big cascade. And that's one thing I've been learning from it, even though I probably won't get into that because
Mm-hmm.
time and energy for it and headspace for it is very very low at the present in my life. But I can absolutely see how that is, like, adding that as an addition to get confirmation is a way better way to like catch those pico tops for a start, but also just get a little bit more confirmation that a move is exhausted. Whereas purely price action, I can kind of get a sense of it. And I'm a bit like you, like I've become a little bit risk averse with my trading over the years now. And where I might have like punted on it before, but then it ticks higher, and I'm like, ah, fuck it, I've got this wrong. This is why I developed. This is why I developed. Like, wait for that high, that lower high, for example, then the lower low, and then enter on the lower low. And that was my way of getting through it. But yeah, I can absolutely see why sort of the market profile and everything is a way better way of, because you're now, I think, the third person I've spoken to. XO is one of them. Order and Flow, his name is. Also was like caught the 125k top on Bitcoin using this kind of like very very similar sort of process. And this is why I've been saying like the
You're with levels in that though, right? So I mean, I've known EXO for years and years, right? And I mean, like really early days of crypto, right? When SE introduced me to him, and he was a good trader then, but still kind of following through the end of SC stable. He had that amazing group of traders that came out. I was fortunate to kind of be outside looking in on there. You had EXO, you had Trader Dank come out of that as well. Load of really, really good people. I think Chad as well, I think learned a lot from EXO. But I know EXO in the early stages as well, before he really branched into the order flow side of things, was still picking these kind of things with price action, not saying necessarily as tight or whatever, but he always had this understanding. I think one of the really big things, and I'm not speaking for EXO here because I don't think, I mean, who knows, right? We all have weird demons, anxieties, and conviction issues. But for me, it was looking at it from more of a kind of, okay, from a conviction perspective, this has given me an extra green light to hit go here, right? I think if you don't need that, and really when I was younger, not like I'm old now, but I'm over 40, right? So, in my early 30s, fuck no, but my problem is probably the other way, right? Felt like I could make a million on every trade, so I had to kind of reel that in because I was hurting myself, almost being a little bit too speculative, right? Or a little bit too gun ho. But I think if you've got something that works for you in that respect and you can spot it in the price action, look, what you see in the price action, this is that exact move you were talking about on the charts at the moment, right? This is the 27th. This is the 1430 high we got. And this is actually a beautiful example, right? With these beautiful flat highs here, right? And we're seeing a lot of energy, but we're seeing real kind of low volume, typical when price starts to range. Yeah, a little bit of a spike down towards the lows, spike towards the highs, but we've got really clearly defined area within here. And even all the way back here, we've got this, yeah, supply that's kind of controlling this whole area. Now, as we look at this run up, this is a, on a 5 minute chart. I'm just saying to myself, now this is giving me the conviction here. Look, 200, 300, 400, initial 1,000 here, then 4,000, right? 39% negative delta, 26 liquidations. You're seeing this. Then you're seeing again 3,000 drive up. Not really getting very far, the 3K here, and it's starting to turn negative on the delta. Now you've got, excuse me, another 3K drive that's done nothing. I mean, this was a 4K drive. Look at the size of the candle. All of a sudden you're seeing these things shrink up as they're just hitting this wall. Now those aggressors are starting to say, okay, shit, maybe this isn't going to particularly work out, and you can move that lower. But you go and look at exactly the same thing on a price action chart here, and you have that same information. In fact, on this one here, this move would have been heavily dictated for me by two areas of supply, right? It would have been this one here, make that slightly less ridiculously blue now, right? And then the localized one, which is this, right? Because what I really like about this one as well, or both of them, is that they've got displacement moves after them, right? Meaning that we're seeing that gapping. We're seeing some form of either aggression here that's starting to get paid because you're seeing the failure of order pairing. And then you're saying to yourself, right, do you have those clean targets? I mean, I love kind of shorting into like clean stacked higher lows or longing into, stack, the complete opposite, right? If you start seeing moves like this that are stacking up and you get the right confluence, that for me is a great trade to come and clear some of this out. But again, it's all dependent on your bias, right? It's no good trying to continually catch a falling knife in here to catch this one trade when with patience, like you were talking about, it's a lot simpler for me now to sit here and say, like, well, okay, this is kind of controlling, I think, like the downside here. I'd say that's pretty fair. I'd say you've got a key kind of inflection and pivot point here that's kind of denoting the support and resistance. So, get back above this, and I think we can probably start attacking this again through this thin move, or reject here, bearing in mind we're below the session volume profile. CVD is diverging, and we've got that beautiful aggressor move coming to nothing. Then, ultimately, I probably would have got stopped out on this little move back, but it's still trading with the flow and the understanding of what price action's given you. Order flow is just confluence. I see people make huge mistake, especially, and he's a wonderful trader, Fabio Valentini. Well, World Cup winning trader, intraday trader, real promoter of order flow. He got really big in the crypto space a little while ago, just got quite viral, and then everybody I was speaking to is just on an order flow chart, just trying to long every footprint candle that like has a tail, and then just wiping themselves out. So, look, you can trade with indicators, order flow, price action, whatever. I think the biggest thing is to find traders, if you're learning, that resonate with you, that see things in a similar way that you see it, and then do everything you can to understand how those traders have been successful and what you can do to do it as well, and just stick with that.
Yeah, I think one of the biggest problems, I guess, what that example you said with long tails at the bottom kind of looks like in price action is something I say quite often. Is that one of the most common strategies which I see in crypto traders, mostly born in a bull market, is that every time it makes a big spike down, takes out a low and wicks it. If you buy that in like a savage uptrend like that lasts for 3 years in crypto, every time you get a big low and you see a wick like that, yeah, it's like a really good buy. But then in an actual downtrend, when people aren't taking the context in, or they go online and they see, oh, this is the low before the all-time highs again, and blah blah blah, and then
You
they
just get this.
basically start buying every low, and then it just going lower and lower, and they give back all their gains. I guess that's how it looks on the order profile, where it's got a big tail at the bottom, and then everyone's like, right, this is it, this is all getting absorbed, and now we've got to send it higher.
Yeah, and the truth is as well, the same things cause the price action, right? Like there's slightly different ways, right? What you want to see is like really aggressive sellers getting absorbed, right, or being caught offside, just to trigger you that they're offside, right? But ultimately, the same move in order flow pretty much made that same candle right on the way down. It's just the construct of how the buyers and sellers, interacted on the way down that you can look to kind of take advantage of. But of all of that, I think the most important thing is not doing something that adds complexity unnecessarily. you know, if you could just go on a chart every day, like I think my best probably part of my trading career was when I was so locked into the Nasdaq that I would just start in the pre-market session. We had this live trading set over at TBN, and we would maybe have like anything, not loads, actually 10, 20, 50, maybe 100 people, excuse me, like paying members would come along, and I would just trade the Nasdaq all day. And I mean, I didn't even really use levels. Just use like a 15-minute chart to kind of work out what the flow was. Let it normally have that first kind of opening range level, maybe 15, 30 minutes to settle, and just work out what side was pushing against a little bit of voice, sometimes from CVD, but most of the time just naked price action. It was looking for that. If you've got that overextension to the upside, you can get those singular inversions on the corrective move, then look to catch the move back up. I think when I left TBN, we'd got that to like, I think 148R. I think that account in like 18 or 19 months, right? And the fees are next to nothing. There's basically zero spreads, right? You can trade zero spreads. So it's great. And then bringing that to crypto has been, yeah, crazy, right? An absolute wild ride, but it's been a lot of fun as well.
Yeah, crypto is a bit nuts. So I did something similar back in 2022. I traded the Nasdaq for probably about 3 months, and it took me a few weeks to realize that every time the bell opened at about 1:30, it would completely reverse like the previous like 4 hours of price action, almost like clockwork for about 3 months. And I was doing it for about 3 months. I'm going, have I cracked it? Have I just like found the golden egg here, or the golden goose rather? And like no one else maybe can see this, but yeah, it was quite a common thing, obviously. But yeah, I felt like a genius for a while doing exactly the same thing.
I think it's a rite of passage that everybody goes through on the NQ, where you're just studying so much data and you're like, holy fuck, I just need to fade the opening move and I'm going to be a billionaire, right? And then, yeah, the complexity comes in. And I think what you were kind of leaning to there is a really interesting part of trading as well, right? Which is your market cycles, understanding longer term what kind of part of the cycle you're in, but also intraday. I think you raised a really good point earlier that resonates a lot with me, which is something that people just don't ask. Another big reason I was looking to be short here is because I've got all these flat highs right now. To a lot of people, they'll look at this price action and not see a range. But what I don't see is a trend. And if I don't see a trend, then it's a range, right? So that's why I like using kind of like volume profile, right? Either on, you would go for a dealing range, for example, in which case this is why again we'd be looking to take the kind of short from up here, for example, or from your kind of low volume nodes. But yeah, people not really kind of that twigged into whether price is trending or ranging, and you've got two very different playbooks for me if I'm looking to do that, because I'm not going to get the same things if I'm looking to catch a move like this, an aggressive spike to short. Well, if I'm going sideways for a day or a couple of days, or even in a little tight range like this, I'm not going to necessarily get those same moves. I'm going to be looking to buy something like this on the pullback, yeah, which is actually something I was looking at over the weekend. But price comes up, breaks out, and I don't like trading weekends. But we gap up and we come back in to retest this. Well, there in terms of order flow, I'm actually looking more for exhaustion. Yeah, so I want to see some impetus initially from sellers to try and get this lower. And then I just want to see volume really start to dry up and there just be no real conviction, because then I'm looking at open interest, CBD, and that. And I want to start to see those longs starting to build in the order book. And then you're getting that secondary pop. Well, if I'm trying to trade this like a trend, and you'd have to be pretty noob, I would imagine, to do this. But say you're trying to trade this and you're thinking, oh well, here's my next high, there's my low. I'm trying to short into this, right? Price then blows through this. What am I doing? Trading like a deviation of the highs back down, or versus if you do get a clean trend and they can seem staggered, even intraday, then you really are seeing heavy respect for these previous down close candles on the way up, right? You're just stepping into that stair motion on the way. But if you can understand that before you get into any trend like this is a great example of last Friday, right? Because we had the move here, we got the sell off, which was a bit annoying before the session. Then we came back up into the session here. But look, you're coming into these lows, fine. But what trends up often trends down, right? So you see the little staircase move higher here into supply, into previous resistance. As this is then selling off and respecting it on the way down, you're just looking to short the pullbacks. You're not waiting for price to come and attack these highs, because the idea is they're going to be left intact, right? As you kind of move through, it's just two very different ways to look at it. And it's probably one of the biggest things when I say it to people and they're like, I don't really know. And I'm like, what do you mean you don't know? And it's like, well, trend or range, I'm just bullish or kind of bearish. It's like, but you've got to kind of surely have a thesis around how price is getting there, right? You can be bullish in a range, you just add more position size and more conviction to the lows, right? But yeah, it's always something quite funny that I'd never really see people take that on board, and it's such an important part of trading, especially crypto. But any market spends 70% roughly of its time consolidating.
Yeah, I can't remember who I spoke to about it, but basically it said I asked why. I think it was Charlie BTC, and he said why do you think everyone in crypto is just like on the way down, they get smoked? And he said I think just the conditioning, people are just like it's an up only market, so I'm just bullish all the time. And like the amount of shit I get like just by posting something where I'm looking short on this, and everyone like, yeah, good luck, you cunt, and all this, and it's
Yeah,
like
like that.
yeah, it's
Yeah.
crazy, right? Because people like even I put a post up a little while ago and said the amount there's so many people that can't see a move up in crypto as a retrace. They will always say that's a bullish trend, but obviously if you're in a downtrend, you'd consider it a retrace. But I think it's just the way that people are conditioned in this market to think it only goes up, and
Super
on a
normal,
higher
right?
time frame it does. What's that?
Yeah, I think one of the biggest lessons you'll ever learn is that it goes down like, staircase up, elevator down, which is what someone told me. And I mean, Christ, some of the biggest trades I've made in my entire career on crypto have been to the short side, right? Like things like Luna, for example. Problem with Luna wasn't making the money. The problem with Luna was getting out, right? Like basically when these things really do smoke and you get these mass liquidation cascades and market makers pull liquidity and stuff like that, who's buying Luna off you when you can be short from wherever, right? But nobody was buying the damn thing. But yeah, it's definitely it's a fun market, right? But it's one that's still very much controlled by the best marketers, not by the best traders. Obviously a post from SC or EXO or whatever, or yourself get 50, 60, 80 likes or whatever. Charlie the same, really. Charlie's a really good guy. I still use him and EXO's indicator from time to time. Did you ever have their old school moving average indicator?
No, I didn't. To be fair,
I think I might even have it on here, right? This is one of those indicators that you see it and you're like, oh my God, I'm going to make so much money in this market. But again, it's all about context, right? But it's there's a little algo behind it as well, and it works out different variables offset against two kind of fast moving averages. But in like trending markets and in higher time frame markets and stuff, I say to a lot of people, like, if you were to just actually just use this as your main kind of trend guide and then dive into the more kind of intraday basics of it, you can see you can get the big meat on most trends. Right? It's just people like you said will just get annihilated here. Just okay, yeah, brilliant, long wick to the downside. This thing's just going to go to the moon, right? And you're just smashing straight into supply. And I think what the best traders do is wait for those moves to come into those key areas, because saying we're reactive traders can be a bit misleading sometimes. It's almost like, fuck, I've just seen a big wick, I'm just balls deep long now. It's like, no, no, no. It's kind of being reactive when you get to the area that you've got the highest probability of seeing your system play out. But yeah, I mean, yeah, huge respect to that. But then you get, other complete twats on there that have never traded a day in their life seem to have like 500, 5,000 likes on there or whatever, or keep shilling these coins that go to zero, and everyone's just like, yeah, come on, man, take us to the promised land. So trading's like any other game. It's really fucking hard and it's really long. And especially as an intraday trader, you think you're just going to make 400x your account. It takes years and years and years. And then you've got to have discipline to, retain the capital. Then you've got to watch your investments. And then, all you're doing is trading. You still need to pay bills, and that comes out of your trading account. Like we were talking a little bit earlier in the psychology side of it. It's very different when, all of a sudden you can't necessarily pay your mortgage, or you can't cover bills that you want to cover because you're not making money in the market. That puts a whole different spin on things, whether you've got good systems or not.
yeah, 100% agree. 100% agree. Um, Before we move on to the next section, I just had one more question about what you said. So you have a target of 2R usually, you said, I think.
No, yeah, what I do is I adjust trades typically at 2R. I want to see bandwidth ideally to 3 or 4. So, for example, just looking at, well, actually, just do it on this chart, even though it's on a daily. Let's say, for example, you're kind of short up here, then I want 2R into kind of like a clear and obvious low, or in this case, demand, right? Because what I want to do then is I want to assess what order flow is doing, and then I can look to see things like, you know, a big thing for me, how things like the Nasdaq doing, for example. What are we seeing on the VIX, the volatility index? If we're starting to see traditional markets start to position more on the long side, and also the same in the order book, then there can be an expectation that other risk assets will start to follow, right? So if that's the case when we're coming into here, I try not to trim too much, but I might take 50% if order flow starts to turn around. I've got my 1R in the bank, then it covers up my fees, and I've got 50% of the trade left to run. I try to leave as much as I can run to a clear target that's 3 to 4R or more. prop, I'm even stingier with it. Prop, I will normally wait for it to try and bleed more towards 3R. About 2.7, I know I can kind of take 1R and leave a bit more meat on the bone and cover the fees. But that's how I like to do it, to just secure something. Just, you got to get paid as well, right? So you just can't wait for the hero trades on everyone, unfortunately.
Yeah, the reason I asked is because I with my trading, I tend to aim for about that 2.5R threshold, and then once it gets there, I start trading quite aggressively and kind of hoping, once you see the signs, maybe it's going to run to 3, 4R. So it was just the way you'd said that was like, oh, it sounds very similar to what I do, and I was wondering if there was like maybe there's some science that I didn't understand about why that kind of number, but maybe it's a measured move or something like that. I'm not really sure. If we're both playing similar sort of ranges or pivots,
I
um,
think a little
I'm
bit.
not sure.
I think you probably experience over time as well. I think if you look at it from a standard deviation perspective of kind of range trading, I think it's quite a common, looking for that kind of fixed R variable. I also think it's probably symptomatic of the fact that we're waiting for trades to come to a specific area, and then before even entering them, making sure that you've got that room to at least earn something off on it. In terms of taking profits quickly, I'm quite a big fan of that as well, because, and it's not just because of being risk averse, it's actually more because, you know, especially if you're hitting into any target, anytime you take a low, right? You even just look at this chart here, you have no idea. If we'd taken the short on, right? Explain, we wouldn't, all right, even though it would have been a nice little trade into this, we wouldn't have taken this because we're just smashing into yesterday's value area low, right? And look what we said, if it doesn't displace back in here, it wicks up and holds, there's so much more chance that this is rotational into the highs, right? And it's just digesting the news. But let's say, for example, that we were short in here, and this is just a little kind of, no offense, but a little bit of a nothing internal 15-minute low, yeah? Well, price comes into this here, I'd much rather know that if we get a reaction down here that's going to reverse price, that I've at least got the opportunity to cover or get out of the trade, even if it's not going to make me any money. If price then meanders back up here, right, I've set my stop loss to entry, for example. If price comes back up here, gives me another opportunity to go low, then I'm going to take it. I just don't want to be giving profits back to the market, and I certainly don't want to be giving my stop to the market if I don't have to. If price comes back to a level, and this is where I disagree with a lot of traders, right? People say you really need to hold trades, and it's true to a respect, but you know, for example, price can do things like this, right? So you've come into this level here, right, or you've come in on this drop and you've gone short here, and then you get stopped out as price comes back to the origin of which you were short, right? 50% of the prior down move, exhaustion candle, great. But then, I don't see why people wouldn't just re-enter here. Fine, I might have got stopped out on the trade, but as long as I see the same things that I need to do to re-enter here, I can get out of that trade, right? And it actually even gives me another opportunity if it drops down here. And again, I was too quick with my stops and it comes back again. People share so many liquidation cascades in crypto, people forget how structured a lot of this is. Look at these charts. If you're short in a lot of these areas, like up here, the market's going to give you opportunities to get in. You just need to do it from the right side. If you're short and you start to range, then look to be short from the highs, or like you do, wait for that conviction breakdown after you've taken liquidity. But just wait for price to kind of come back to key areas. And then when it starts to violate them like this, fair enough. Even if you did get trapped in a long here, fine. It happens to everyone. It will happen to me again, I'm sure. But then as you get kind of back into here and you start to resume the downwards momentum, you see where the aggressors are, then you just kind of stay on the right side of it. I don't want to be derogatory to how people trade. I just think that people are so bloody eager to take any trade that they can, because they maybe only have an hour or 2 hours a day or 15 minutes a day to look at the chart, that they're just kind of like, right, I want to see the pattern, I want to do the thing. So much of it's overlooked that you can see with just a really good, understanding of basic structure, really, and how price moves.
Yeah, I think that was a good point. If you're taking shorts, make sure you're at a high because then you can get out. And one of the things that was a great point because it's something that I've always struggled with. I don't struggle. I mean, I've been round tripping a lot recently. I'm probably going to round trip my Bitcoin trade tonight based on how it's looking at the moment. But exactly the same thing. And I think it's a problem when you're telling people your public trades, unless you're live trading and you're being
Mm.
active. But like what I do, where you post it, I'm going to do this at this point, and then things
Mm-hmm.
change. But like if I get, I might trailing stop method is basically if I enter at a high and then I'll
Mm,
see two lower lows and then two lower highs between my entry and where price is, I'll
mhm,
trail down to break even. And then on the next low, I'll go to that third lower high and then keep doing that. And sometimes, based on that system, on that second lower low, it might retrace back up to my entry and take me out.
yeah,
And but I've got that system in place because I know that, and I'm sure you've seen it as well, you'll get those freak moves which just absolutely rip it and then come back down, and those sting. But when it hits the break even and then it just like drops again, it feels to me like a very kind of obviously it's reactive, but it feels almost
mhm,
in the realm of revenge trading because you're like, oh, I just got tagged out, and oh, there's another momentum candle on my side, so I got to hit it. And like I feel
mhm,
like that was one of the things I used to get burned on a lot. But
mhm.
realistically, if you just kind of take a breath and go, right, objectively speaking, this is still within the realms of my process and still within the realms of my like strategy or exactly what I'm going to see in the pattern to enter, so I've got to hit it again. I think that
Yeah.
was like taking enough of those kind of like panicky trades, and it was like, oh, I've got reference points now, and I know, I remember the ones that were shit and remember the ones that were good and what was the difference between them. And
Yeah, that's
yeah.
the key, right? Is the differentiation. It's making the mistakes that this is such a important lesson of it, and this is where Twitter's just such a toxic place because, or can be such a toxic place because it's a place where people are so quick to be derogatory, or people just, if people spent the amount of times they do slagging other people off just learning, they'd be so much better off for it, right? And the problem with that toxicity is that you also get a lot of people that are then only wanting to show wins and want to show and want to breed this culture of, this kind of, Lambo chasing culture. And what the space really needs is to show you really how difficult it is, how you can go through multi-year P&Ls, basically breaking even, earning no money when you're working on like proprietary desks and stuff like that, and you're working basically for commission only. How it's very difficult to grow size in crypto. How there's a lot of incentive for people with large audiences to be targeted by exchanges that want them to look like they're maybe trading a bit more than they really are. Like that, and that to everybody makes them really risk averse. And actually, you want to go full aviation industry on how you deal with risk and failure. You want to embrace it, accept it, put it under the microscope, and make you a better person. Versus the medical industry, which is like, fuck, I'm going to get sued. Let's hide everything under the rug. We don't want to be, we want to be risk averse because that's the enemy of progress, right? And as traders, what you said really kind of hits home because you have to. The caveat here is what you said as well. It has to meet your system, right? Because for example, if I was like on the Bitcoin chart, if I was short here and I was just holding for a really good chart, price gets back up into here, and I'm seeing what I still want to see to be short here, I have to take that short. I can't just say to myself, "Fuck, it's retraced to here, so this might be strong now," because that's not my system. My system, if it's strong, it will be above here. If it displaces above here, comes back down, and we start to see absorption, then I can flip that long. But if you're just so obsessed with not being wrong, you're probably first of all going to miss both, right? And look, if you get stopped out on this short here and price rips above higher and gives you a great long entry, you're basically just paying the market for data. None of us know where the market's actually going. We're all overlaying different theories, methodologies, data studies, and that to have a chance of being right 50%, 50% or more, or 30% or more, if you've got a good risk to reward, right? But conviction's probably the biggest killer of traders, I would say. Flipping between different strategies, not having the conviction to enter, and the flip side of that is, like you said again, which is, having that revenge element of, I knew it was going to drop from here. It's taken my stop out now. I look like a plum, and I'm going to go back in, an even bigger size and just hurt myself some more. And then I'm even going to carry this anger into tomorrow and do it all again.
Yeah, I think that is a rite of passage as well, and it also
Yes.
what you said as well earlier. Who was it? I can't remember who you said you were quoting, but doing one thing over and over and over again and it being boring. And the way it is for me is just I'll wait for a range at an area where I deem is important, maybe a supply zone, or a demand zone or whatever, and wait for price to range, and then wait for it to break out a couple of times in line with the trend and or whatever my bias is, and then look to get in on that strength. And it it's something where I I mean, if you look at a range, right, and you look at a breakout of a range, and there are multiple ways that you can play it. You can get in on the pullback, you can get in on like the initial breakout, the second test, whatever it is, right? But if you go and get 1,000 reps or 1,000 trades on that same system, you're going to know all the variations of that pattern, all the different behaviors as well, which you won't get if you suddenly go after 30 trades. Oh, I've only got a 25%, 30% win rate, and but I'm going to move to something that's way better because this has caused me too much pain. But you'll miss out on all the information if you don't stick with that one system, right?
It's just consistency, isn't it? I think the problem is people want, and again, it's what's projected in the space, isn't it? Overnight millionaires, and it's not. You know, if a trader can earn the same or a lot more actually than a brain surgeon or the CEO of Coca-Cola, then they're probably going to have to work just as hard, right? Or everyone would do it, and the industry would have no value. So it's that side of things. I think the biggest takeaway for me, and I think the most important thing, like you said, and I thought I'll flick it onto a 1 minute Bitcoin chart and just to kind of really emphasize the point here. It's if you've got a strategy, right, and your strategy allows you to clearly define an area, you know what you're looking for, and then you get a second set of parameters that if you meet those parameters, so let's in this example just say, okay, you're looking for a drop into an area because you want to be long here, for example, right? Price starts to move sideways, right, without the use of volume or anything. There's so many different ways that you could cut this. I know you're somebody that's that uses supply and demand a lot, right? So you're either looking for the expansion above demand, which is telling you the sellers can't keep price suppressed there anymore. As you see those higher lows building into that as well, gives you a little bit of conviction. You don't, you're not even bringing, then all of a sudden you start to bring CVD in and say, okay, well, CVD is kind of backing up the move as well. Happy days. If you just do that consistently all the time, and I'm not saying that one thing, then you're going to learn how all these different shapes and patterns start to interact, right? Like you said, in an ideal world, if you want great risk to reward, you're long from the lows of this. Price runs out the lows, gets back inside the range. You can trade from here to here pretty safe. Yeah, like you said, then find out what happens here, whether you want to secure or not. And I quite like the higher highs, the double higher highs, or the double lower lows, that kind of methodology. I used to have it that once we'd set an impulse high, the price had then retraced. If we then broke that initial high, I wouldn't expect that previous low to be taken on a trend model. So that I would just move my stop immediately intraday up to that low. Um, Not bad in Forex, really, really good across equities, terrible in crypto because you just get those scam wicks that just are designed to just dip you out and then kind of go for the stars. But I think if you see the market in one particular way and it works for you, then the difficulty for most people is staying consistent and putting enough of those reps in. It's like the 10,000 hour rule, right? You look at the greatest people through history in sports, your Tiger Woods, in football, your people, your Pelés, these people are just playing the sport again and again and again because they loved it. But you can love something and not do it constructively. That's the difficult thing as well, right? And in trading, you have to be constructive with it. You need to know what you're doing. You need to have progressive practice to understand that you're learning something deep and relatively niche, that you build up more knowledge over time, but you're never going to learn the whole market. You're never going to learn all the different systems. You need to really understand yours. And I did it, looked into a lot of your trading since we were kind of introduced recently, and I really like it because for me, I can kind of package it and overlay it. I can say, well, I can understand why I want to be short from this area, and I understand what I want to see there. Then my only job's to execute. I don't want any other jobs because there's much higher likelihood I'll screw one of them up. But Brent Donnelly, one of the best forex traders in the world, in his book says something that always sticks with me, and he's like, as soon as you enter a position of any size, your rational brain dies. Right, your rational brain just goes out the window, and the irrational one comes in and just goes, my God, Trump's going to bomb the world and everything's going to go wrong and like Bitcoin's going to zero, right? So you have to have that structure. And as we were talking about earlier, feeling into trades, I think that's where that only comes with time in the market. But you're not just saying, oh, I want to be short from it, I'm just going to find something random. It's still within the structure of your range, right? When you're looking at that, you might be feeling into how price is reacting at the highs and how aggressive the drops are, but you're not just looking for any old pattern anywhere. It has to be specific.
Yeah, I think it's and I chased like um perfection with technical analysis in my first probably 5 6 years of trading, and it was always based on if it comes to this exact level, I'm just going to hit it. I'm going to hit it for whatever sake. But now it's kind of enough pain of like getting things wrong or setting limit orders and levels which I think are strong enough to hold, made me realize, well, actually, to save myself that pain, to improve my strike rate, and really like to improve my comfort levels when I'm trading, I want to find that confirmation of, is this level going to bounce or is it going to break through? And what do I need to see in order to be convinced that this level is going to hold? And it kind of just evolved then from, here's a level where I normally would like to short, to let me see a range that forms and then breaks out where the buying gets exhausted. And yeah, I find it quite a simple view. And I feel like a lot of traders look at that kind of thing as, it's too simple. I wanted to make it really intricate when really is just number goes up and keeps going up. I'm going to buy it.
I think I have a little bit of input on, not input, but just an opinion on that with your system, especially, right? And I think why it's such a kind of clever interpretation of it is because it's how price moves, right? Across all markets, price is either in one phase or another. It's either in balance or out of balance, meaning it's either trending and expanding to find new value, right? And this isn't, people think this is all, looking at charts, candles can't predict anything, blah, 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 blah. There's so many opinions out there, right? Like, the saying goes, like, arseholes, everybody's got one, right? It's just, if you look at it from a more kind of, if you look at it from an auction market theory point of view, if you look at it from a psychological point of view, whether you're selling cars, chickens, houses, whatever, something is worth what somebody or other or a group of people are willing to pay for it, right? So it makes sense on that front that if the supply and demand are out of whack, people, for example, a new TV show comes out, everybody wants to watch it, but they're only going to sell 100,000 subscriptions for it through whatever streaming platform tomorrow. Then those, people will buy those tickets, they'll sell on the secondary market, they'll be inflated, the price for everything will go up, right, on a supply and demand basis. But the most important thing that I ever learned really was about those two phases, because accumulations are where larger accounts, major players, and institutions accumulate or distribute, right? So the market's either in the phase of thin orders, price moving very quickly, or you're in just different stages of chop. I mean, we can both see it on both of our charts now, right? If you just look in, you can easily just put, even in this tiny little kind of microcosm that is this chart, if we just look at the different areas that we've got consolidation there, minor consolidation here, right? Even this little move is an out of balance move higher. I mean, I regret doing them all in the same color immediately, but so let me change these ones to like blue. But even within this, and again, price being fractal, right? If we just look at these here, right? So you've got small consolidation, small consolidation. This is the market out of balance. Well, when the market's out of balance, it's either faking out or breaking out from a previous area of balance. So we have this large expansion high, and then we create this range coming into here, right? Price runs the range high, and then it sells off aggressively. It forms another range, right? These ranges are just so important, and you see them obviously on all different time frames, same as this here as we go through. So I think while certain people's systems can be simple, and we see it a lot with smart money concepts, ICT, where it's just like, oh, okay, you've got a breakout, enter on the breaker, target 5R. Fine, look, I appreciate that the guy reintroduced, should we say, some price action concepts and stuff like that, and then went a bit off the rails. But a lot of people have learned that kind of stuff from him. But, you know, what you're doing is you're taking something that on any time frame, yeah, you're going to see ranges, you're going to see breakouts, even a small consolidation like this. If you want to be short from it, well, clearly buyers and sellers are kind of in agreement here. Yeah. This sharp move up, however you're, denoting the entry form of it, even if you were waiting for price to come back down below the range, this beautiful sell off here with displacement, little range retest, and it does move lower. So I think when I looked at some of the trades you were taking, I was like, shit, actually, I wish I'd kind of thought of that probably earlier in my career, because a lot of the kind of intraday systems I had, looking back in hindsight, benefit really, really a great deal from understanding that methodology. But I'd not really seen it so much put in an execution model before. And I think it's really, really interesting, because you can basically short or long the extremes, right, with tight invalidation, or wait for that little bit of extra confirmation on the breakouts, and then using the range, I suppose, as that barrier as that stop loss.
Yeah, that's it. And obviously, you'll play that differently depending on the conditions. So what you said earlier, where you'll get the breakout of the range, you'll get a retest of the range, and then you'll get a higher high. I might enter that with a stop below the range, but then if it pushes up, I do not expect it to get below that low before the higher high, and then I'll move my stop, and then that's how I'll trail it like that. And that works in trending conditions. But if you're in range bound choppy
Not
conditions,
here,
then
right?
you don't want to move that quickly, do you? You
Mhm.
might
No,
get
you
another
do.
3 tests. So yeah, it goes back to what we were saying. You need the context of what conditions you're in, and I feel like a lot of people, you see it online when you'll get a few green candles, and everyone's suddenly like, boom, that's it, bottom's in. Like we're going to just trend up from now,
Yeah.
and people buy into that like literally, and get caught with their pants down because they haven't applied any context to it. They're just
Mhm.
seeing momentum to the upside as every time I've seen this in the past 3 years, it's going up even more. So I'm just going to buy it. But yeah,
Or
adding,
like the regime in a bear market.
yeah, yeah, like my worst days intraday are when we're in a choppy market conditions, and then you've got a range that is just like deviating both sides multiple times in the day. And um,
Mhm.
I had to limit my trades per day on when I trade on M1 to 3 max. And
Mhm.
again, going back to your point where you'd said, I can't remember what book you said you got it from, but about how the rational brain just goes out the window, and then
Yeah, Brent
um,
Donnelly, called I'll send it to you after. Really, really, really good. But Alpha Trader, I think
no,
is
I
the
think I've read it. Yeah, because it rings.
oh,
I've got it in on audiobook. I say it
yes, it's
rings
on
a bell.
audio.
Oh,
Yeah,
nice,
it's
cool.
really good. I love
Yeah,
audio. Out walking the dog, great opportunity to just kind of clear your head.
that's it.
And there's a podcast that I have to shill. I have no association with him, but I got to interview a guy called Alfonso Picadillo years ago when I was at TBN, and he's called Macro Alf, and he runs some humongous funds, and some humongous fund managers have him on their books as a consultant. And it's him and Brent Donnelly run a podcast called The Macro Trading Floor or The Macro Compass. You should really check it out, man. I mean, it's a typical kind of super wealthy American dude who's a total legend, by the way, and like a pretty flamboyant Italian guy. So they do supposed to do one every week. You're lucky if you get like one every 3 weeks or something, right? But it's worth it for the alpha that's in there. And it's true. It's understanding that about yourself. If you're going to act irrationally, build systems and processes in that are going to make you act kind of more rationally. For me, that's why session volume profiles became so important because I just tell myself, right, and I'm a complete, you know, no matter what I think my brain is trying to do, I know as soon as I step back into this environment here, right, if this is the prior day's range, I'll just put this across in case anybody can't really see it, right? I know as soon as we have a high momentum move inside of this, then I'm fading the highs of it because I'm expecting it to rotate. Does it always do it? Of course it doesn't, right? But it does it enough that I can make enough from the winners on it and I lose less from the losers, right? Even at a 50% strike rate. And it happens more than 50%. So, versus before, like you said, I'd kind of be this perfectionist of, well, we're kind of bouncing here and then it's coming back down, but maybe we're kind of finding supply here. It's up. No, look, just what's controlling the downside? This is the last key up move. It's all this supply up here. Get above that, we can start to look bullish again. But as long as we keep smashing into this wall or creating new areas and blockers below, support resistance, supply, etc., then I'm going to at least trade this to rotate it. If we're trading the next day well outside of this, right, then I need to establish where the key supply and demand is, right? In this area, it's actually quite large because we've got it all through here and actually all the way down to this wick. But I'm just looking in the session to be short here. If we rip up and we're displacing above it and we start to hold, then I can look to go long back to the prior value area, right? If it doesn't meet those conditions, it has to meet those conditions, right? If it doesn't, if we're in the range, we're more likely to be rotational because we're in the area that people previously considered value. So, like a kind of volume based idea around how you would just typically trade ranges. And ultimately, if we're in a strong trend, yeah, price is coming up, you're normally just stacking on top of these anyway. So you're going to kind of get your long fix. But when you start to range, long the lows and short the highs till it stops working, right?
Yeah, exactly. And that's actually a really good example at the top of that swing on the left now, where it broke below the range 2 or 3 times, and then it had that big push up to close above. Yeah, there. And you're like, okay, if this is going to push up now, the next candle is going to be green, and therefore it's going to start trending up. And I won't expect the bottom of that pump candle to get taken out. But if you're
Mm-hmm.
able to look at it as this might be a swing high, and you see that big push up, and then as soon as it gets taken out with strength with that second candle, that's like boom, that's my entry. Because
Nice.
you've got to put stuff into context, right? Where we've retraced up to a supply zone. It's tried to push up with a lot of strength
Mm-hmm.
after creating lots of small, low volume candles that are kind of compressed, and then it rips up, and you're like, well, that's a breakout sign, right? And if it's going to break out, it's going to push up. But if it doesn't, at swing high, at supply, and
Mhm.
this is like got big strength after to the downside after a failed move up like that, it's like A plus conditions for me.
It is, but like you said as well, you know now, even if you were trying along the breakout here, for example, and you get taken out because price breaks back below, I'm sure you're probably looking at similar areas to me, like the prior range low, and also this, what should have been demand now, acting as inverted supply or like a breaker. Price kind of coming back into that. The people that were gig along here, that are now, holding whatever they hold dear to them quite close to their chest, thinking, please come back somewhere close to my entry so I can get the hell out of this. Then you've got those parameters, and that's why I love ranges, right? And I mean, you just know as soon as you see something like this as well, you've got this massive move on the CVD, it just has this huge divergence with this higher that it can't take out. All of a sudden, for me, there, I'm thinking, okay, maybe I can fade this back down into the range, but I think where I would have struggled with that here is with stacking for these volume profiles in a real kind of bullish nature. But then I'm still using the same range to go long here or long here because I'm waiting for price to sweep out down below the lows, and then we've got this demand here, right? So we're coming into this demand, we're down below the range low, and I'm saying to myself, right, okay, this is where we're now looking for that little bit of confirmation to ping this thing higher. Because if we are going to reject, it's a lot less likely we kind of limp into the low and then just drop out of it. We're much more likely to flush, induce buyers, take out the last sellers, and then screw the buyers again. Right, and that's just how the market works, right? And ranges just encapsulates it beautifully. I think, for me, it's just I see a ranging market, I think, clearer than I see a trending market. I think by the time I've really got locked into a medium and long time frame trend, I'm at the stage where I'm almost considering starting to fade it again because I know I've missed most of it by the time it's there.
Yeah, it's like also if you're in crypto as well, right, and you're trading low caps or something or medium caps that haven't when they go into price discovery, how the fuck do you trade them? And it's very simple. You just wait for them to retrace and range and then break out again. And it's like when everyone's emotions are really high and everyone you log on to X and everyone's going fucking ballistic. Oh, how do I just got a FOMO? I've got to buy into it. But I always say to it, you just wait for it to slow down, range, and then break out, and then you follow it like that. It might be retrace and then range, or it might just go up, range, and then go up again. But you can't just like buy something that's trending. But the days when, like when you said earlier, you opened the session and it'd be moving before the session, and that's annoying. And I find the exact same thing because sometimes I'll get to the charts. Like typically, I trade a day trade FX, a day trade cable on the 1 minute chart.
The USD, brilliant, love it.
Yeah, yeah. Oh, you do it as well. Oh, perfect. Yeah.
Yeah, I
I mean,
start on cable, funny enough. Yeah,
yeah.
it's right up my alley. That's a slow moving bastard though, but it's great to learn ranges.
Oh, 100%. And that and dollar yen is where I cut my teeth with it, and then I kind of realized that trading the London session it was better to trade cable. Um, but it puts in like really nice breakouts and just like really good pans. But if I'd got to the chart in the morning and it moved too much in Asia, I'd be like, I'm done for the day. I can't do anything because I know it's either going to chop around and do nothing, or
Mhm.
on one of those 1 out of 10 days where it just keeps ripping. I'm like, I can't get in because I've got no logical place to kind of define my risk and feel comfortable about using a high or a low for my stop because I haven't got enough context other than the fact that it's absolutely ripping and it doesn't rip a lot and it's kind of like it's uncomfortable because it doesn't
Well,
do
you
this.
have that understanding though, isn't it? I think that's what I really kind of struggled with initially with crypto, right? Is I come from this realm where you trade one or two assets and you understand everything about it, every news announcement, everybody that plugs into the index, even if you're trading something like the Nasdaq. You know exactly what the Mag 7 are doing at that time. You know exactly what the major catalysts are when the FOMC is, when earnings are calling, blah, blah, blah. Same with like cable, you're looking at the UK rates decisions, you're looking at the US rates, all these, you can kind of just go so deep into an understanding of that. And some people find it distracting. Like for me, I found it really kind of helped me gauge that. And then I came to crypto and I'm just like, oh, right. Oh, what's this? Atom. All right, let me try and trade Atom like that. Oh, Atom looks brilliant for a short here. That's brilliant. I wonder why that short didn't work out. And then someone's like, yeah, because Bitcoin's ripping, mate. And you're like, what do you mean because Bitcoin? Why the fuck? Like, okay, like a major in the like, oh no, no, everything follows Bitcoin, man. So just, I was like, well, why doesn't everyone just trade Bitcoin then? And then you do have those variables, but it is. there is still the hangover from that side of things, right? In crypto that makes it difficult. And I actually said on my live stream recently whether I'm going to follow through with it. Well, no, I intend to follow through with it, but it's so funny kind of hosting live shows for people who get really disgruntled about the fact that you can't catch a trade in like a 2 hour live show or something. And you're like, well, I'm trying to show you how to execute these things in real time. So there's no good me taking them outside of the session. You've got all my other trades for that. You've got the Discord, blah, blah, blah. But we're actually trying to find things and execute them within the session. And the problem is, I'm looking across a load of assets that are basically all have one key driver. They're massive beta risk off assets. The market's a little bit shocked for risk at the moment. Crypto was just dying while the rest of the risk markets exploded. People are getting paid really handsomely elsewhere in tech and other things. We've moved towards some real defensive stocks now where you're getting some great earners. I mean, who's like PM and stuff like that. Johnson and Johnson was on a mad rip a while ago. So there's not really that kind of interest there. If you can kind of understand those side of things, or not everyone, but for me, it really helped. And then you come to crypto that's just a lot broader. At least if you focus on one or two, tokens, you can understand what's going on with the ecosystem when there's launches, whether you've got the buy the rumor, sell the news kind of situations coming up. I do find that helps, but ultimately, unless you're these outliers like hype has tend to be, and like we've had a few others as we've kind of swung through the cycles, then you're normally going to kind of see the same thing or have the same kind of effects, and it's just one extra variable that can kind of kick you in the arse a little bit. So with crypto, I tend to stay pretty adjacent from the news because otherwise I find that there's a million other ways I can just convince myself to stay out of a trade, right, for no reason.
Yeah, I find myself not confident trading a lot of alts, even though I'm a price action trader. If I don't understand the fundamentals behind it and trust the volume and trust the momentum of a trend,
Mm-hmm.
because with crypto, it could just be like what we've seen recently, where certain influencers are just like, right, we're going to get paid to shill something, and is a totally inorganic move. And I'm like, well, where can I short it first of all? But I would not be comfortable long in that because I'm like, the floor can come out of it any time. Whereas I think Bitcoin's really beautiful to trade now because it's kind of trading like a legacy asset or a legacy instrument from like 10 years ago, where you've got really clean supply and demand zones, if you like. You've got really clean ranges. You've got really clean impulses. I mean, obviously, saying that now, in the past like 6 months, it has mostly been dog shit, but it
Has
it,
it?
you
It's
can make sense out of it, right? But in general, it it respects key pivot points, I guess, and key supply and demand zones. It respects them very nicely, and even if it like ends up faking it or whatever, but in the general vicinity of certain areas, you're almost always guaranteed to find a trade as long as you can wait for them. Like I had to
Mhm.
wait 2 3 months for an entry at 82K, but once it got there, like my conviction was almost like 100% that it was a good place to short. And that's what I think is really nice about Bitcoin. But if you go down to alts, I'm very, very like just
Well,
not
this
confident with them.
is the other problem for me, right? Like, I love trading Bitcoin. I find it's incredibly clean. I've actually been fortunate to really see the transition of Bitcoin from a trader's perspective, from the very early stage, big gappy charts, right, on all the early stage exchanges, to really
Like the
more of
Bart
this kind of
Simpsons.
exactly. I mean, everything was just head and shoulders back then. But I mean, or you just bought the damn stuff and you held it. And I mean, I never really did actually. Unfortunately, like I got scammed out of a lot of Bitcoin at one point, right? But even back then, it was I think 18K or something like that, or maybe might have been in the 30s. But it's it's that whole kind of Bitcoin is becoming or has become an institutional asset class. You've got ETFs in it now, right? The way that it's going to trade is always going to be very, very different now. It is going to align itself a little bit more with traditional markets. And I think I used to say this a lot back in the day, which was never really a massively popular talking point when I'd go to the talk speak to have the pleasure of speaking at things like Token 2049 and that. And you're typically on the stage with loads of degens who are just like, this is going to change the world and blah, 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 blah. My argument with it was that I think the ceiling is capped to when it really becomes institutional because it might change the world and it could have the power to do it. And we've seen the technologies there, but people would never ask the right questions. If the people that control the world now are making the money the way they make money, and that's heavily reliant on the financial system the way it is, they would have to voluntarily give up all that wealth and control to adopt Bitcoin unless they make it institutional first, put it onto the balance sheet, and then wash it in a very natural way that they can control the timing and the effect of that when they also probably control the supply. Right, that's really how big markets work. There's no rebel cause against the stock market. Trillions of dollars are flushing through the Nasdaq every day. Bitcoin is a flash in the pan in that respect. But if you can understand those changing dynamics, it's a beautiful asset to trade. But I can't trade the damn thing on the low time frame. So I really want to trade it because I can if I'm trading a cash account and I'm on one of my old centralized exchange accounts or a DEX even where I've just got some insane KOL deal or something where I'm paying like very little to no fees, I'll trade Bitcoin all day long. But if I trade it when I'm paying any kind of fees, the moves just aren't big enough for me. I think the ADR on Bitcoin's at 2.3% at the moment, or no more than 2.8. ZEC, the assets that I favor like near and stuff like that are up sort of 6, 7+%. So I know as I get those moves, I can afford to have large enough stops for for good risk to reward that also aren't, costing me my entire account on fees if I'm wrong. Well, cost me the fees either way, but if I'm wrong, it's that double impact of you're almost always losing like 1.3, 1.4, 1.5 R in some cases if you're really pushing the envelope on the M1.
Yeah, I find the same. Like, even though I trade cable on M1, I can't trade Bitcoin on M1. Probably M5 is the lowest I can go, but M1 I just find it, yeah, same as you, just not able to
Bizarre.
do it. Yeah, yeah. Right, that was a very long chapter one. So I think what we do, because I know we said about chapter four probably being a little bit condensed into chapter three, we'll combine them, but we'll whiz through chapter
Okay.
two, which was basically just a little bit about your background and your lifestyle. So how you got into trading, how long you've been
Okay.
trading, so I don't actually know that, where you learned from, and what's kept you going, really, because obviously there's a lot of pitfalls about trading, not only with like losing money, but absolutely destroying your soul in the same process. But like, so what's kept you coming back, and also what your kind of well, I'll ask after that, but your current like lifestyle and habits, like what you get up to each day. But if we could start with like your background, like when you got into trading and stuff.
Yeah, sure. I mean, it was a pretty unremarkable story, really. I mean, it kind of fell into it by luck. I spent, but I grew up in a middle class to poor background. We didn't really have a lot, kind of go camping holidays and stuff like that. So luxury lifestyle wasn't really anything that was, that prevalent in my life. Not that it wasn't, brilliant family, friends, and stuff like that when I was younger. Suffered heavily from ADHD, which was the so I was always super full of energy. And I've really found the world of kind of like traditional education very constrictive. I got really good grades from kind of like, all the way through until the end of secondary school, which came with this immense pressure to go to university, get the degree, go work in finance, go work in law or whatever. But I kind of saw the people that did and just felt like it was this really kind of boring way to just fall into some middle class lifestyle that would just consume me. And look, it's for some people, everything's for some people. So it's never knocking anybody if that's what you want to do and what you've achieved in life. Absolutely fair play to you. But I really didn't think that was going to be for me. So, I left, I went to university. I mean, before I did that, I traveled a lot, scuba dived all over the world, instructed all over the world, and just kind of got this feeling of independence. So I left university after I did my foundation degree and bought a music studio and then just was in the music industry for a lot of years. And then off the back of that, ended up starting a more corporate business, which was to do with kind of procurement and educate in the education and public sector in London. And that got really, really quite sizable. Off the back of that, we got investment, then started a digital marketing company that's still going today, actually. Kind of doing all of that. It sounds really harsh because there were some really good successes in there, right? But I don't. I feel like the challenge was the thing that really drove me, not what I was doing. And I really wanted to find something that I really had a great passion for. I had a great passion for music, but you can't earn any money. So then I found other things you could earn money in that I wasn't really that passionate about. And I just became really good friends with somebody that was a forex trader and worked in London and just started spending a lot of time together, hanging out, going to the football. For my sins, I'm a massive West Ham fan. Um, fuck. As it, you, just if you're a West Ham fan out there and you're watching this, just don't be a trader as well. You've only got so much capacity for disappointment in your life, right? But yeah. So I met him through that, and we just one day just chatted about it more and more, and just on a random beard up afternoon before a game, he was just showing me a few things, and I kind of found it quite interesting. Anyway, he said to me, "Look, come over and I'll run through some stuff with you and that." So I learned some basics off of him. Then just weirdly, I think this might be commonplace with ADHD sufferers. I just became massively obsessed with it. just it was the entire world all of a sudden, and there was this emergence of crypto at the time, which people were really pitching as like the Wild West rebellion against traditional finance. And I was like, fuck, I could learn all this stuff in traditional finance, take it into crypto. I can have this world that's all about discovery and all this other mad stuff. Um, and that's really how I kind of fell into it. And then I got very lucky, because I had the businesses that I did. I exited from the businesses and I kept dividend shares in one of the companies, which allowed me to take a year sabbatical. That I just worked like 10 hours a day, and no exaggeration, 10 hours a day at least, 6 days a week. I said to myself, if I'm going to do this, then after a year, I should be able to at least be on an even keel where I can pay the bills. I had the leg up of knowing some really good people, some great people in the early stages like Tone Vase as well. A little bit later down the line, I met people like SZ. I was part of the cohort from Trader Dante, for example. So I kind of relatively luckily in the early stages fell in with a couple of really good people, and then they helped me kind of cut through all the noise and kind of get to that side of things. You got to remember, trading wasn't really seen as that sexy back then. People were looking more at you kind of Wall Street brokers, people making the deals, mergers and acquisitions, right? Traders were kind of seen as a bit more on the analytical, nerdy, or massive cocaine head side of things, like on behind the charts. So I got into that, and then I managed to get myself a commission only spot at a German proprietary desk, which is when I started trading cable, which is why I really started to lock in with that. And then also indices, and they opened the first crypto desk there, which I then worked on. Um, After that, and that was a really kind of wild ride as well. I kind of got a little bit disillusioned with things. Kind of basically, I need to be careful about what I say because there's kind of a bit of an ongoing legal thing with it. But the person that kind of started the fund basically sort of scammed a lot of people. We'd all agreed that we would pool all of the Bitcoin. So basically, the idea was making all these trades, securing Bitcoin with it, locking the Bitcoin away, staking it, basically the whole time just growing this big Bitcoin reserve that we would then, when we, when we were pretty sure that, it had started to turn, the conditions were there, we were going to sell the whole thing, big blow off bonus, and do that. And ultimately, you know, whoever it was involved in that at the top decided that they were going to disappear with the holdings of everyone, which they did. And I'd worked kind of a year for basically no pay and what I thought was going to be at least maybe, certainly high hundreds of thousands, maybe a couple of million in Bitcoin. And then that all went downhill. And after that, I maybe spiraled a little bit, but I never really lost the love of trading. And I just, I'd lost a lot of money at the time. I was kind of in there. I'd started to trade again with Pepperstone, who was the broker I used to use in the UK. And then I kind of got encouraged into crypto, just again randomly by a few friends, and started trading that. Randomly ended up in some trading competition that I won. And then Crypto Burb contacted me and said, "Hey, we're looking to hire some traders. We want to build out the education side of the Discord. We want to take people into live trading, teach people about traditional and legacy markets." He said it seems right up your street. So I went and interviewed there, and this big interview process with loads of other people, and yeah, I was there for about a year, and then I became head of trading there when I was dealing with trader development, trader recruitment, running the trading desk on a day-to-day basis. I think, certainly in the time I was there, and probably just a bit before as well, I think we had some of the best, trading stats, and we had an open book as well. Every single trade was monitored, open book, everything was shared with members and on the Discord. And yeah, it was great. Then off the back of that, I started to travel and speaking at events and doing work for exchanges, working on a consultancy basis. And actually, how I got the opportunity at Hyro Trader. In truth, I didn't really want to work for a crypto prop desk because I'd come from the kind of proprietary world, which is very different. And it was kind of, the crypto prop side was very looked down on, because it was just this whole idea that, it's just purely designed to capitalize on people's failure, which actually most things are, I suppose, really, when you look at it, especially in trading.
That's
And
literally what trading is.
it's literally that. It's a zero sum game, right? So, and unfortunately, it's not like it's even a 50-50 win rate. There's just a small percentage of people and corporations that really clear everybody out. But I suppose that's the lure to it as well, right? That's the addiction that we all have to try and break this kind of unbreakable game. And it was just really the kind of belief that was putting me there with that development that I took. And then I had a chat with Samuel, who's the owner at Hyro Trader, and he just said they want to do things differently. They're one of the first, prop firms, I think, if not the first, to have direct API integration, so that traders got real-time executions, not some old legacy CFD stuff, which again, that can be manipulated. It's also never going to be in favor of the trader, which means you're even more likely to lose in a game that's already stacked 94, 96%, in the favor of the house. Um, Yeah, and he just told me about what the ambitions were, what they wanted to try and build, why they wanted it to be a prop desk, you know. And I said, look, if this is something that wants to be built by traders for traders, then I'm really interested in that. And I'm also really interested how we can look to attract some of the better traders, you know, in the right way, bringing them in, allowing them to develop. And if they're really good traders that start to develop through the prop side of things, let's look to maybe build a bit of an internal team here, look to give these people access to live capital. And while that's a slightly longer term vision, you know, at the moment, it's about making sure that the partnerships with the right exchanges go down so people can access it from all over the world, that they get the right user experience. Um, so yeah, I was kind of a little bit, I suppose, of a kind of jack of all trades, and still kind of am really. Just I think the thing that's kept me going is just a huge passion for it. I just love it, even in my lowest moments. You know, like I find kind of sitting and looking at the charts very therapeutic on a longer term kind of scale, which is what I do with my investing, which is very moving average, long term based, much more about the scanning methodology of markets to find strongest groups, strongest sectors, you know, ones that are outperforming in terms of relative strength. But, you know, my real bread and butter will always be intraday trading, you know, testing yourself against the will of the market and, you know, those other participants in there, and just trying to not be the one in the squeeze, but be, you know, the one the other side of it.
Yeah, I think people probably like me as well. Like you could probably just find yourself at home getting lost in like the 1 minute chart for hours and hours and feel like you've not wasted any time.
Or
Like,
just in bed after a 12, 14 hour day, still just looking at things on my phone because I've thought, like, fuck, I wonder actually if we spend four 30-minute candles outside of a range, or what the percentage chances that this thing's more likely to go up from here. You know, like, or is any wick too big? Like, what if I just go around in the morning at all these massive wicks, you know? Because I saw some dude on Twitter who seems like a really good trader called Luxury, I think is his
yeah,
name.
luxury. Yeah, he is a good trader.
Oh fuck! It's supposed to be luxury. It's supposed to be a play on luxury, isn't it? I've only just realised that now. But yeah, really good trader, and really liked what he was saying about these kind of like big scam wicks that you see in crypto, and how the data tests and studies he's done has been like a real kind of eye opener to how more often they get filled within X period versus people seeing them as these massive rejection things, thinks they're absolutely about to bomb. Yeah, and he was also, yeah, probably a couple of years ago in his really early stuff was the one that he said about, we had a really brief interaction, I think, on Twitter or something. He was saying like, oh, you know, the data's starting to shift now, showing that we're getting a lot higher volume volatility come into crypto a lot earlier. And I was like, fuck, this is like the stuff I'm studying. And he was really, really open about all of that. But yeah, really cool guy, and stuff like that as well, right? You know, you do meet, if you take the time and you spend the time, and it is time, because you know, relationships, networking, friendships, stuff like that don't build overnight. But I'm really, really proud of the fact, or pride's probably the wrong word, because I've probably been lucky for a fair bit of it, that I've just got these wonderful, you know, kind of network of contacts in this industry of people that are really at this every day, because it is a really lonely pursuit. I think a lot of people say to me, like, well, you can just enter the markets and you trade. Why don't you just do that rather than take all the abuse of doing this stuff online and live trading and working for paid discords, which always has that kind of stigma about it. Although the high road trader one is free, that's not a plug, by the way. I just don't want to do the guys a disservice there, but I've worked for paid discords, and happily so. I mean, you'd pay to go to university. You wouldn't fucking go and have brain surgery, would you, by someone that hadn't paid for their education? I don't understand the stigma, but I loved that side of things because it gave me that social element back, which I think I struggled with, where you're talking to people every day, working with traders, working with a trading team, and that's a really important thing about community. I mean, I don't know how you deal with that, right? Because I think you fly everything solo with what you do, other than, you know, I'm sure you surround yourself with some good people, and there's some good people that have developed under you.
Yeah, I'm very introverted to be honest. First of all, shout out to Luxury. Luxury is a really cool dude. He came on my stream a few weeks ago, but maybe a month or two ago, and
Get the guy to follow me, will you please? I can't seem to grab his attention. I don't know what it is.
yeah, so I messaged him even just the other day, and he just kind of like thumbs up something and didn't reply to anything else. And I was like, okay,
He's a
but
busy
he's
dude, man. He's been doing
yeah.
loads with like MMT and stuff as well, hasn't he? But that's what I mean about, you find these really good guys. When you've spent enough time in this space, you can identify them really quickly. And I can be quite shameless sometimes. I did it with Follis. I was like, went to Singapore and then ended up really luckily being able to meet him at like this really small kind of intimate private lunch, which was organized by Adrian CryptoBurb. And I was just like, right, now this is the playbook, man. This is a guy that I want to network with. This is a guy I want to get to know. If he'd been a massive prick, obviously I wouldn't have bothered, right? But he was a really lovely guy, super switched on. Like anything, if you can surround yourself with good people, it really does help.
Yeah, 100%. I mean, part of me doing these streams is basically to meet new people, and I'm like even with you, like finding myself just vibing with people who maybe we haven't interacted a huge amount on X, but now we've had the opportunity to. I'm like, right, we've got to talk more after this. And
Yeah,
one
100%.
of the thing
It doesn't
is,
make you better though, right? If you don't push yourself, because interesting for you, because you don't seem that introvert. Sorry to interrupt you, but you're very engaging, talkative. I really like your videos, and that you seem quite like calm and in control of it. But this is almost you, isn't it? Pushing yourself out of your comfort zone to go after that. That's massively admirable.
thanks, man. Yeah, like I keep meaning to post about it. I've got something in my drafts, literally just saying I've met a ton of really cool traders over the past few months, and like I really want to have friendships with them and ongoing relationships with them. But having the headspace and the time to manage that on top of everything, I know with my life it's gonna iron out over the next few months. I've just got a lot of stuff going on at the moment, but yeah, like building these connections is kind of like through the stream is we could have had this conversation like on Discord in private, but I feel like a lot of people are going to get a benefit from it, like having it on stream. But also, like, I want to have these conversations where people hear real conversations from real traders because it's lacking in the space. But generally speaking, I am like, yeah, like before every stream, before like every like half an hour or so before I come onto the stream and meet someone else, I'm like shitting it. I'm like, fuck, like, what am I going to talk about? Is it going to be a really dry conversation? Thankfully, it's not been like that with anyone so far. And
Always good. You seem good chatty people, I think. Maybe that's
yeah,
just me.
yeah.
I
But no,
completely agree.
my background is, yeah, I'm very introverted. I kind of pushed myself out there. I had sales jobs when I was like 18, 19, 20, 21 that kind of
Oh, really? So,
yeah, fucking
commission
hot.
only.
Commission only. Yeah, but that's the thing. They taught me a lot, and I wouldn't be who I am without them. But it didn't match my personality at all. But yeah, the way I manage it, to go back to your point, is literally just kind of these streams. And where I live, I haven't got many people around me. And a lot of my friends live abroad, and I'm moving abroad next year. So
Oh,
at the
nice.
moment, I'm yeah, very low social life, and I'm just grinding away on because like same with what you're saying, trading is my passion, and I
Mm,
like creating the content around it as well because people benefit from it. But I also kind of get that little buzz internally of sharing something which I want to share, like
yeah,
because I don't have a mate next door. I go, oh, check this out on the charts and like, look what I've
you're
done
not
and whatnot.
excited. Yeah.
Yeah, like I don't have that, so it's like nice to be able to do that online. But yeah, it's I think we have similar sounding backgrounds as well. Where didn't fall into the education system. I quit uni after 6 months because I hated it and just wanted to make money. And when I found out about trading, I just got fascinated by it. But I think it's a catalyst for self improvement as well. I think it's something which shines a light on a lot of your demons and your bad habits where you have to fix them in your personal life in order to be able to trade successfully. And when I did a deep dive into it all, probably like 5 years ago, when I first started, like I moved away from the technical side from swing trading to day trading, and a lot of those emotions were flaring up a lot more regularly than they were when I was swing trading. And I was like, why have I got these problems? Why, if I've got a strategy to like take a trade on a double breakout, why am I doing it when there's not even been the first breakout? And like, why is it when it stops me out, I'm flipping short and then it stops me out again, then I flip back? Why am I doing all that? Why can't I just stick to a plan? And I've always been really fascinated with that side of trading. And it takes up a lot of time, as you know, it takes a lot of headspace. And if you've had like a day trading session where you've maybe taken in two or three big trades, or like just trades in general, because they're all like heavily emotional decisions, right? And
Mhm.
you might have had a choppy day, and then you've got to spend the rest of your day like kind of like just moping around, tail between your legs, and you don't really want to be talking to other people. Um, so like it
Which
kind
is
of
why
suits
I
me in
like
that way.
talking, right? Do you know what I mean? Like, I think it's good to see people in the space like you that are more open about it. I talk very openly about my ADHD and stuff. Not that anyone would need to fucking ask, right? Unless they've spoken to me. But it's like, I think it's important because there's this kind of false ideology, or ideology is the wrong word. Maybe this kind of like false vision of, you know, oh, okay, trader person, you have to be this stone cold algorithmic backed, you have to be whatever, bench pressing 300 kilos of a weekend and up in the morning like running along the beach in your pants or whatever. Like, it's all bollocks. I know this great Aussie trader called what's his name, something SMFX, right? And there was this big period, right, where people were just coming out and they were putting pictures of like smoothies and stuff like that and bits and pieces on there. And there was SMFX and there was he's I can't remember his fucking name, Bitlord, who's just one of the funniest blokes you'll ever meet in the
So
space.
funny, man.
I've had some serious parties with that guy, right? Like serious parties with that guy, and you know the ones where he was just like doing massive lines of blow and having like 15 hookers in the background of his like Aussie apartment and shit like that, and then just going like 2 million into Doge and shit. Like, I mean, the guy was just he was something else, but they were real like entertainers in the space, right? But you know, there's some really cool people in that. But the whole stigmas that exist around it, you see these people that break it and they come under, you know, they get attacked for it. And I know people like that aren't everybody's cup of tea, but I'm not talking about these people as well as in like, oh, I saw this guy online. Like, you know, I've met these people for real as well, right? And you know, you get such a much better feeling when you can do that or have this kind of intimate, you know, more intimate kind of, you know, call like we're doing now, like a video call rather than just, you know, pinging a few messages through DMs. But you know, they got rid of that stigma a little bit that you have to be this like ice cold, you know, this person that doesn't feel emotion, because it's not true. And the problem is it then means people don't deal with those emotions. And if we look historically, we've had a similar issue, especially I think something that's actually affected men a lot more over the years, which is this whole kind of, you know, hold everything in, you know, don't speak about things, don't be emotional, don't show weakness, stuff like that. And where there's a time and place for that, um, it's not in trading, because trading will just find all of your darkest moments, and they will find every way to just 10x everything, right? But you'll get the same on the highs, right? Your highs will be the highest highs. I remember the first time I made like $18 or something on a Bitcoin trade or whatever, and I was just like, holy shit, you know, this thing works. I can apply these systems and make digital money, you know, out of this. And you know, there's so many different ways to do things. Understanding yourself and that psychology is probably one of, you know, the biggest factors.
Yeah, I always remember like saying to one of my mates years and years back, like I would see people out and about getting like really super excited about a TV show or a movie or something like really, really arbitrary. I don't know, but like getting super excited about something what I would find trivial. And I remember saying to my mate, I was like, I wish I could get that happy over something really small. And his point was, yeah, but if they feel that happy over something that small, feel how yeah, exactly how bad they feel on something very small, and just got the roller coaster. And it kind of it blunts you over time, doesn't it, with trading, where it kind of grinds you down, where you get like a higher high on your P&L, and then you're super like I'm the fucking man and everything, and then you go to a low, and then you get and then you just like go through this kind of like period where you go through a cycle, I guess, of I'm the man to maybe I'm the man. Like I feel like the man, but maybe I'm not. And like, but
Yeah,
everything's
yeah.
going up, and
Things get a little bit less, a little bit
yeah,
exciting. You learn to take things in your stride. I suppose is one of them. One is the best thing. But for me, for a personality type that has very high highs and very low lows already, obviously trading just blew that up into just this mad stratosphere of the world's going to end one day to, you know, I'm going to be the next Elon Musk the next day. But like you made a good point earlier, I think trading actually helped me a lot in life in general as well, how to kind of learn or kind of expand on how I could work under pressure. And you know, I'd already done things like public speaking. I traveled a lot, right? I'd done a lot of kind of like public facing things with the companies as well. So where it was kind of an anxiety to you, I was maybe a little bit better versed in it. So while you have those anxieties, they weren't really crushing kind of things. But then you change as you get older. In my 20s, I didn't even know what anxiety was. You know, it wasn't until I got into maybe my mid 30s that, you know, or early to mid 30s when things really started to change. You know, you get that kind of pivot point. Life starts to get a bit, you know, it's really serious for me then. Before then, it maybe seemed like a little bit easy, you know, and I've been through this whole constant flow and cycle. But actually, trading does kind of help me stay level. And I think one of the most important things it really refined in me was if I'm really not in the right headspace to get somewhere where I can get into the right headspace. So if I'm not in the right headspace of the charts, I'll typically go and walk my dog, right? That's the best kind of breaker for me. Just out, bang, go walk the dog, boom, right? Just immediate separation. And that's not just from trading. I do that. I've taken that into my everyday life now. If I find I can get really frustrated with things, or you know how life is, you can just be down for no reason, or you just get something. Some days you just wake up with a damn grump, right? And I'm like, well, I just need to break that headspace, get out, get with the dog, fresh air, back in, sit down. If If I feel better, bang, I'm back into it. If I'm not, there's plenty of other stuff like to do, right? Like you say, silly things like just reaching out with a couple of messages to people that I've been networking with, responding to a few different people, putting a few articles out or sharing on Twitter. That kind of, you get that different kind of side to things.
Sorry, I thought my mic was on, but it wasn't. Yeah, uh, yeah, like just waking up in a random like brain fuzz. The first thing you need to do is get outside. I think, not sit in front of the charts. But yeah, I'm just gonna share my screen. I don't know if you can. See, you should be able to see it, right?
Yeah.
Yeah.
Hopefully, you're
So
clear.
this is
I think I can make yours bigger, possibly. Yeah.
yeah, I've got it on screen for the stream, but basically this is a really good example of how I would look to trade. So we've got a big low here that gets taken out, and
Hmm.
then we have this kind of like little cluster here sitting on there. So I would call that kind of the end of that chain. Like you'd probably say that as the whole range, right? But
Hmm.
I notice when it comes up to that point, we have the range. It's broken a couple of times to the downside, but experience tells me none of that is something that's going to follow through. Then it pushes up to the upside today, puts this
Hmm.
big push in, fails all the way back down to the low, and then obviously while we've been on stream, FOMC's pushed it up. We have a
Yeah, that's
lower
correct.
high,
Yeah.
and then it's now, if it now closes below this, which I'm pretty sure it probably will, even this candle or the next one, that would be my entry, and then I'd put my stop above that, and then look to take that to probably this low down here or something, 61K. But
Yeah,
yeah,
makes sense.
this is what I was talking about earlier in terms of when you get the like this was not the right push. You can see
Mm.
that in hindsight, obviously, but you
Yeah, but
once you've traded enough ranges, you'll know, okay, that first one is normally is going to get something, some sort of move like that. But yeah, this would be a tip. I probably, once we get off stream, I'm probably gonna trade this actually. But
just get that. Funny enough, is like I said, I really wanted to be kind of short ZEC today on the thing, and it just held up the most incredible amount of strength throughout the day compared to like loads of the other assets. It's just quite nice to see it like rolling over now, because I was, obviously my early involvement in it was here when it's come back up into here. And I was saying to myself, getting back down outside of this range now, I think it's much like more likely if BTC follows suit that we start flushing down into those lows. And I also think after the FOMC, there was no real reason for that to be massively bullish. I don't think the markets would have had most of that priced in terms of the print. But right, I'm conscious of the time, because I think I've maybe got about another 6 to 10 minutes that I can think. And I know we want to touch on this psychology point, don't we? So if you
yeah,
want to grind into that, but I love that system. I'm definitely going to look a little bit closer at that. I found one of your videos the other day where you kind of did a one of these, but I think it was on like a 5 minute chart, and I was like, "Fuck, that does look it does look damn interesting actually as a pattern. I may have to look into that a little bit more."
yeah, for sure, man. It is like very, very simple. If you know where you're doing business, I mean, half the battle is, half the battle is like doing like the trading at the right place, right? But waiting for the right signs to get at the entry trigger is kind of, leading into the patient side of things. But you also have to have the experience to know when that things come. So when I it's again, it goes back to the point when you're creating content online, it's like, oh, when this range breaks to the downside, then I'm going to take a short, and then it breaks to the downside a couple of
Not the
times.
way you want it to,
Yeah,
yeah.
like this bit, and people are like, well, I've taken a short here. And I'm like, well, that's, yeah, technically it has broken out like a couple of times, but this is the one that tells me to get in, because look at that strength, look at the failed push up here, look at the three like lower highs, you've got set of lower lows, and then this range, even though it's not the cleanest, it's not like hitting the highs and lows perfectly, you can see it's a very clean pivot point because it comes all the way back up to them like several times. But
Just love the CBD divergence on it as well. I'm sorry, I know you don't really use it, but like, there's so much of that that resonates with me. You see the drive up
yeah,
to the full drop. Yeah,
this
so
one,
that last, yeah,
yeah,
that last drive up, that is where I'm looking to get short on the 1 minute within the supply that's at the top. Those two up close candles,
yeah,
yeah,
sort of up
massive
here,
strength. So as we drive up into that, I'm looking for, okay, CBD's just gone absolutely nuts. We've got this massive drive. It's set a huge higher high, but price action just isn't following it in there. If you then go to like a 1 minute chart, you're likely to see some kind of inversion setup, or maybe something like on a two, or you're certainly going to get that kind of failed deviation spike. But normally, I think on that secondary drive up, yeah, that one to the yeah.
This one here.
Yeah, I think there's maybe some kind of they're normally an FVG at that kind of second spike up. So
Yeah.
the bullish FVG that's at the top of that peak there.
This.
Or yeah, so the bullish FVG. No, sorry, on the yeah, kind of from the blue candles from the previous high. So it's
Oh,
the
like
bullish.
here?
Yeah, exactly right.
Yeah.
It's
Okay.
the bullish
Interesting.
gap that's closed through with momentum on a very thin move up. That's the exhaustion of that pop. Yeah,
Okay.
so
Yeah. Yeah. Okay. I see.
maintain the bearish bias. There's no reason to be bullish yet. Origin is still suppressing the market, or the supply is still suppressing the market, right? I would have been happy to try and take that first spike up as well. That happened about 7 o'clock.
This one.
I like the pincer highs on it, but the see there's just too bigger gaps in the bullish gaps that precede it. There's just
Uh.
two gaps in that leg, so that it's just like yeah, right at the highs
Yeah.
exactly. Those gaps they're just big. They're just going to absolutely crush my risk to reward. But if I'd had a structural shift with gapping and then a return to the gap, I would either get in there. But I love those kind of inversions as they drive up, and I think on the M1 might have even just had just a cheeky little bit of a CVD divergence here as well. Yeah, yeah, it's just I love moves like that. It's just the problem for me here is if I'm going to get involved on something like this, even if I took the lower candle, it's not terrible, but it's like a 0.295. So I'm going to have like the position size is going to be absolutely massive, even on its kind of 200k. So you're just going to lose the majority of it in fees. And then, but very similar, like with you, like I said earlier on the stream as well. Now that price is breaking down below those range lows on the 15-minute, I'm then just looking for these little spike backs up into that lower range to then find absorption and then to take the secondary part of that trade lower. Yeah, so I'm happy to add again there, but not risk more than the profit I've made.
Yeah. I'm
So
with
I'm
you.
ultimately always at kind of net neutral.
Okay. Yeah. Yeah. Right, we've got 2 minutes till 9. We probably have to do another one of these, mate. Another call or another stream in next
Yeah,
month or something, and get the rest of that in because there's a lot more we can probably cover. But I did think we'd probably end up waffling today.
yeah, I mean, it's hopefully it's been valuable to people. But I mean, I'm more than happy to jump on again in like a few weeks or something, and we can pick up where we left off. I mean, like you say, it's yeah, a couple of guys or girls that are passionate about the market. It doesn't take a lot, does it, to just chew through a couple of hours.
That's it, man. That's it. All right, we'll wrap it up here, and then we will do another part another time for sure. But I appreciate you coming on, man. Appreciate everything you've shared as well. I think there's a ton of alpha in this stream. And we kind of aligned a lot on views and how we trade in our processes, which is really cool to see as well.
Yeah, it's been really, really good, man. I love the idea. I love what you're putting out into the space. It's great to just make such another good connection in this as well. And yeah, I hope the people that watched it were interested. And remember, if you want a discount on your high rate trader Top account, use my
Trader Matt.
discount. Trader Matt, there you go. Get him some Trader Matt.
That's it.
All right, brother. So thank you so much for having me on here. It's really been a pleasure, and let's hopefully do this again in a couple of weeks.
Yeah, man, for sure.